All right, I'm here. I'm sorry. I had to go to UPS to drop off a package, and I thought I'd be back in time. And then next thing I know, I was not back in time. So I was in the car, and then there's this truck that's like taking forever to move because for some reason there's trucks that are like 17,000 feet long, and I'm in traffic. But I'm here. I'm so sorry. I thought I left at 3. I was like, I'll be back by 3:45. Yeah, we were not back by 3:45. All right, so it's been a hell of a day. It's been a hell of a market. It's been a pretty bright day. As you can see, this yellow shirt. This is how bright we have in terms of this market today. We've got a lot of companies that are doing well, and the reason they're doing well is because, Bitcoin is doing what it has to do. Robinhood, first of all, $15.59. P says, did you finish 10ish late today? Oh my gosh. $15.59 on Robinhood. It's up 7.6% on the day. The thesis is being played out. I think Wall Street figured out what we had figured out, and we're seeing some momentum in good old Robinhood. So 1558, I still believe it is undervalued. It's not as undervalued as it was a couple days ago or a couple weeks ago, but I still believe it's undervalued. And I think now with the crypto run, which we are going to talk about as well, Robinhood's price targets can go much higher, just given how crazy this can get. Bitcoin, 54,703. We touched 54,983. We were $17 away from 55. This was a stock, or sorry, not a stock. This was a magical entity that was 50,000 last Saturday, 51,000 this Saturday, 52,000 this morning, 53,000 by 11 a.m. And now rounding out to the market close, it's at 54,713, maybe making a run for 55,000. Now, why is this happening? Why is this going on with Bitcoin? We also have earnings today. We have a bunch of earnings to discuss, so this is going to be a long one. We got a ton of stuff to talk about. The BlackRock IBIT, ETF has gotten $1 billion worth of inflows today. $1 billion. So what is happening right now in the context of Bitcoin is this is not retail. This is all institutional. And the reason it's institutional is because obviously they're buying on behalf of the inflows that they're getting. If they're getting more inflows, obviously they want to continue to buy up the asset. And as a result of that, the asset starts to go up. There is a supply shock happening in Bitcoin right now where there is not enough coins that need to be chased for the demand that is chasing them. And it's not retail. We looked at that chart this morning where I compared the Google Trends of Bitcoin. I mean, I'll just show it one more time. It is pretty obvious to me that Bitcoin is not in the capacity of retail yet. A lot of this surge from 38 to 55 has been from institutional. Now think about this as well in the context of institutional investors. I was talking to someone today and they told me about this, which makes a lot of sense. If you're buying the ETF and you're a pension fund, you're 60 years old, you're in that stage where you're trying to really hold for the long term and you don't want a ton of volatility. This is Bitcoin compared to Palantir stock and Nvidia stock. As you can see, it's not even comparable. And Nvidia and Palantir have run up a lot. Bitcoin in 2017 or 2021 is not even like 20% of where it used to be. When that gets closer to 40, 50%, this thing is going to get even crazier. If these pension funds are buying the ETF, they're being advised by Fidelity, BlackRock, not Vanguard, even though Vanguard might end up coming out with an ETF soon, to hold this thing. So if you're not buying and selling and trading the Bitcoin ETF, which some people are doing, but the far majority of these people are buying ETF and they're just having like 1%, 2% allocation and exposure to the asset class, they don't have any intention to sell when it goes up 20%, 30%, 40%, because they're holding it for a long time. Especially a lot of these people that, they invest in their 401k every month and they don't really look at their investments. If you have, 0.1% of your 401k allocated to the ETF on Bitcoin at BlackRock, and this is times millions and millions of people across the United States of America, it is going to create an even bigger supply shock, because at the end of the day, if those people aren't selling, and if the hodlers from 2009 aren't selling, then who the hell is selling? The price has got to go up in order for it to be sold. So to me, whether you care about Bitcoin ideologically or not, and this is the mistake I made over the past couple of years, is I had an ideology around Bitcoin. That's stupid. Like the ideology should be, how do I make money? And if you want to make money, there has to be more demand chasing less supply in order for an asset price to go up. And it seems like that story is going to play out in the context of Bitcoin, and so far has been playing out. Ethereum as well has been doing incredibly well today. It's trying to touch 3,200. ETH is up 9%. ETH itself is 3187. So it got close to 3,200, 3198, but it did not officially touch 3,200. Aditya says thoughts on ETH. It usually runs with Bitcoin. I think what we're seeing right now, and we talked about this on the morning open, we are seeing a rotation into alternative assets. Ethereum is not really an alternative asset, but it's not Big Daddy Bitcoin. $380 billion market cap. $38 billion of supply circulating over the past 24 hours, or sorry, 14 billion of supply. That's up 38% over the past week. So, it's not Bitcoin, but it obviously has a ton of utility when it comes to NFTs, when it comes to smart contracts. You may philosophically agree with those things or not agree, but tons of people find use cases. MetaMask is one of the providers of Ethereum. It's a crypto wallet that's purposely built specifically for the Ethereum blockchain. They reported 19 million users September 2023. There are 30 million users as of January 2024. They got 11 million users in a couple months, and that hasn't happened since 2021. The reason it's happening, I believe, is because people are waking up back to the concept of crypto. And as a result of that, these asset classes are continuing to appreciate. Tesla hit $200 today, up 4% on the day, 199.55. I think this had to do with a couple things. Number one, Li Auto is up 18% on the day. They had a pretty good earnings. They're a Chinese EV company. And then we've got Rivian that I think is up 7% on the day. Yeah, they're up 6.6%. They are now trading at cash value, a little bit above cash. And I think the market was just like, well, if they're trading at cash and the company's not going bankrupt, and maybe we take a chance on them. And as a result, Rivian started going up as well. So, I mean, it's been an exciting day in the market. We still got a lot of stuff to talk about. Got the market closed in 2 minutes. Robinhood 1559. That is the biggest shock to me. I don't think anyone expected Robinhood to be at the levels that I didn't expect it to just bust through the way it's busting through. And it busted pretty heavy. And now that's why Robinhood is at this level. ELF today is, wow, ELF's up 7.5%. We'll talk about Google after the bell. Google's a bit of a loser today. By the way, Gartner came out with a report today. So forget all the AI woke stuff. Gartner said search traffic by 2026 will be down 25%. They said search engines will lose 25% of their traffic. Now, could they be right? Yes. Could they be wrong? Of course. But Gartner is a pretty well-established tech firm that does a lot of this research. I mean, C-suites pay thousands and thousands of dollars for their research. And according to their methodology, they're saying, hey, in the next 2 years, a lot of people are just not going to be searching on Google or Bing or DuckDuckGo or any of this shit. We're going to be going to AI. And so if Google does not adapt, they don't make any money off generative AI. In fact, they lose a shit ton of money because the cost to inference versus the cost to do knowledge retrieval is orders of magnitude higher. Stock's down 5% today. We'll talk more about them, but they are going through a little bit of a crisis. Nvidia up about 0.42% today. They were at close to like 805 today. Then they fell back down. The options volume on them is crazy. We'll talk more about them. CleanSpark, 23% on the day, $20.37. Why is this happening? Well, Bitcoin's going up. And if Bitcoin's going up, CleanSpark will be going up with it. SoundHound, I didn't even get a chance to look at this thing today. It's up 47%. I don't even know what to say about that one. Like, I really did not have a chance to look. I've been busy all day running around, and I did not see this one going up 47% after being up 100%. Now, they have earnings on Friday, and I think if their CEO is smart, if he hires, a public speaking coach that can really get him to communicate his message, hopefully he will talk to retail investors and sell them on this vision and hopefully get a ton more of them to get excited. And if he's not, it might not go that well, but let's see what he can do on Friday. Ladies and gentlemen, Monday, February 26th, 4 p.m., the market is now closed. All right, there we go. The market is closed. All right, what are the earnings? Because I didn't even get a chance to see the earnings today. Today's Monday. Oh, shit, there's a lot of earnings today. Holy crap. Hold on. All right, let's make our list. Dude, today's just been kind of crazy. Today's been absolutely crazy. And so I didn't even see this shit. Okay, so we have, and I should know this because I talked about this in the morning, the earnings that we had. Zoom, we have Zoom, we have Unity, Workday. Okay, Unity, Workday. Okay, what else do we have? We have Car Gurus. I don't know what that is, but maybe they have a little bit of a Carvana moment. Who knows? I think those are the main ones. Oh, and Hims and iRobot. Hims and iRobot was the thing that was supposed to get bought up by Amazon, but that didn't happen. Okay, so these are the earnings we have on deck. I think we'll listen to Hims. That's the most exciting. Let me know which one you guys want to listen to after we're done. I think Hims will probably be, I've never heard of Hims before, but I've heard of the company. I've never heard the call. It's between Hims and Zoom, and I think Hims will be more exciting than Zoom. So Zoom is flat after hours. Hims is flat. All these guys are flat. Okay, so we probably have 5 minutes until their earnings come out to see what's going on. I'm going to play a quick clip as I'm getting all the material ready that I heard today on CNBC on the idea of Google And so let's get a couple of different perspectives on Google and kind of what's going on. And as we're watching this, I'll pull up all of the earnings data that we need to get, which should be out in a couple of minutes. All right, here we go. Here's what's going on with Google, and we'll be back in a couple of minutes.
Alphabet, it is underperforming, under pressure today, this year as well. Look at it, down 4%. So, Joe, we have Joe, Jim, Josh, all own shares of Alphabet. This is on the Gemini rollout, which I think it's safe to say has been a bit of a debacle.
Yeah, this is frustrating, and it's frustrating because coming into the year, I identified Alphabet as one of the mega caps that I felt had the most opportunity to really catch up in terms of performance relative to the other ones. And I wanted to personally buy it. And thankfully, I haven't personally buy it. Look, it began with the earnings report at the end of January. The stock was around 153. The stock has never recovered from that earnings report. And there was softness in the Google ad revenue. Now we come in this morning, the stock is down 4%, and you're questioning whether, in fact, this company can be a reliable source when you're thinking about AI. And what happened last week is troublesome with Generator, and you think going forward, okay, can I have confidence in what they're doing in AI? And clearly the market is debating that right now. It's very frustrating.
Joe, excellent comments, and it is right to have questions. I'm going to give you an opinion. Obviously, we're predicting the future, folks. Can't guarantee this, but I do think the question is that, yes, you can own Google here and add to it at these levels and feel pretty confident.
Can you trust them as reliable?
You know, can you trust anything about the future?
No,
let me try to answer your question. Let me hang on.
Okay.
You interrupted me before I fully answered the question. Okay, if you go back about a year ago, it's just a little over a year ago that Bard first messed up. Remember this satellite question? You know, what satellite first photographed an exoplanet, and they got it wrong. Stock went down. It went down hard, down to like $90 a share. In the last year, the stock's up 56%, and I will grant you that's nothing like, you know, the rest of the AI stocks. I will grant you that. It is, however, 2x what the S&P 500 returned. Now, can the same thing happen here when they've had another misstep? I say yes because fundamentally, you got to go back to the beginning. This is the company that has owned DeepMind for many, many years. It is one of the pioneers in artificial intelligence. Yes, they've had some missteps, and maybe that's because artificial intelligence is hard. Maybe it's simply really innovative, and you're going to make mistakes along the way. That is part of innovation. I think Google, Alphabet has the tools in place to succeed and thrive in artificial intelligence.
Okay, Josh Brown then goes on to say that Google's trying to program culture, but he said he's not selling because, I mean, I don't know if you would sell Google right now at that being this low. If anything, I think they're going to get a crap ton of buyers coming in, but we'll see what happens there. We'll talk more about Google in a bit. Let's get through some of these earnings. So HIMS is not out yet. Car Gurus is down 8%. They were down 16%. Now they're down 8%. I've never heard of this company before. I don't know if anyone owns this one, but I'll pull up their numbers. Zoom is flat. Workday is down 4%. Workday, from what I understand, is like a Monday.com type of company, project management type of stuff. I might be totally wrong. Enterprise cloud applications for finance and human relations. Okay, so not really project management, but something in the cloud space. I'm pulling up their numbers. Okay, so I got Workday. While we're waiting. All right, let me know if anyone owns any of these stocks. If anyone owns Workday. All right, here's Workday. Here we go. Fourth quarter revenue is $1.9 billion, up 17% year over year. That's a lot. I didn't know they'd do that much money. Subscription revenue is $1.8 billion, up 18%. Fiscal year, wow, they did $7.3 billion, up 17% year over year. Subscription revenue $6.6 billion. Operating cash flow is $2.1 billion. Are they down? They're down 4%. This might be another scenario of something that was priced to perfection. Their market cap is $80 billion. Yeah, this kind of feels like a Palo Alto in terms of, now Palo Alto fell hard. By the way, we got to talk about Nancy Pelosi. We'll talk about her in a second as well. But I don't know anything that deep about this business, but if it's down on these numbers, which are not horrible numbers, it seems like it might have just been a little bit pricey. Okay, we'll get back to these. Let's look at HIMS. I know that's the big one here today. We use Workday for my organization. Yeah, I've definitely heard their name before. I just didn't know exactly what they do. HIMS is, oh, wow. There you go. HIMS is up 11%. HIMS took a HIM pill, I guess. HIMS IR. Let's take a look at what they've got. Now, this is a company that is fast growing, very fast growing. They're an e-commerce business. They sell subscriptions for, they sell dick pills. Okay, that's what they sell. That's like their main product. And then they sell weight loss stuff. Like they're trying to be like a health wellness brand for guys and girls, mainly guys as their core demographic. Don't have the results yet. Looking at Twitter. Let's see if we can get that. And then we'll see. Oh, hair loss too. Yeah. Okay. Zoom is out too. Let me pull up Zoom. Let's see if we can get them. And then let's see. We have so many earnings, dude. I thought after NVIDIA we were done, but nope. This week is going to be heavy. Okay, Hims, here we go. Revenue 246 versus 245 million. They beat by $1 million. EPS. Oh, wow. I think they're profitable. Are they profitable? Domino's was this morning. I think it looks like from what I'm looking at, they put up 1 cent of profit. Did they? They see 2022. So 2024 revenue 1.17 to 1.2 billion. They beat expectations on guidance. They're up about 300 million on guidance. That's great. Net orders 2.3 million versus 2.38 million. So they lost a little bit on net orders. Are they profitable, dude? There's no way they're profitable. Oh shit, they're profitable. Yo, they made $1.2 million. If I'm not reading this wrong, I think they're profitable. Wow, that's why they're up. Where's the stock? Stock's at 1188. Okay, so they're up 15%. That's on GAAP profitability. Shout out to them. I mean, being GAAP profitable is not easy. Unity. Oh, I did unit group, dude. No one told me I did unit group inside the thing. I picked unit group. Okay, Unity itself. Oh boy, they're down 7%. Oh my. Unity looking like an upside down V. What did Unity do? We know they messed up with the devs back in the summer. Okay, so let's get their numbers. And the CEO had to resign, dude. It was that bad. Unity, I don't have the number. Okay, here we go. I got Unity. 609 million versus estimate 562. They beat on revs. Net income, they lost 254 million. Free cash flow 61 million. So they lost 250 million, but they beat on rev. They're down 10%. I don't know if this is an overreaction, and we've seen that a lot this earnings season. Companies go down and they start to recover pretty quickly. We'll see if that continues to happen. But I think those are the core numbers. I'm going to try to get their actual investor IR. I'm also going to pull up CNBC live and see what they are saying as well. Hims is 12. Wow. There you go. That's what happens when you get profitable. Palantir did it. Robinhood did it. And now Hims looks like they're trying to do it. Okay, we have Zoom on CNBC. We have Zooms on CNBC. So let's pull up Zoom and I'll get the other ones. Okay, here we go. Should be good. Unity at 27 or below is a buy. I agree. Unity anywhere. I think mid-20s on Unity is absolutely a buy long term.
Have been progressing over the last several months. But if you do see that happen, you're going to start to see a market Russell that really led them. I think the inflation data is really.
All right. Workday, meanwhile, just reporting down about 6%. Adam, Megan, thanks to you both. Zoom video earnings are out as well. Pippa Stevens has those numbers. Pippa.
Hey, John. Zoom beating on the top and bottom line for the fourth quarter, earning an adjusted $1.42 per share. That was ahead of the $1.15 estimate. Revenue coming in at $1.15 billion, also slightly ahead of estimates there. The company also announced a $1.5 billion buyback. Also gave strong guidance. They see Q1 revs between 1.
Dude, everyone is buying back their stock. They're up 5%, and it seems like it's because of the buybacks.
1.25 billion versus the 1.13 billion estimate. EPS guidance both for Q1 and full year also coming in ahead of estimates. The stock now up about 4.5%. John?
All right, Pippa, thank you. And now Mike Santoli's back with a check on the good old 60-40 portfolio. It hadn't.
Okay, so Zoom beat on revenue. They're doing a buyback. Nothing exciting, dude. Guys, remember, it's up 9%, but it doesn't even seem that exciting. This is Kathy's third largest position. This is her AI play of the decade. This is the stock she says is going to go to 1,500 by 2026. I don't know if that's going to happen. And her bear case is 700, if not 1,500, which I think is also a little bit of a stretch. But she's got $800 million just poured into this company. And I think what happened is after the pandemic, it went down and she didn't want to take the L. And so she just kept buying more. Look, it's up 11%. That's great. But Zoom's, I mean, like, dude, Zoom is the $1.4 billion of revenue. 1.25 is not, that's like what, 7% year over year growth. I'm going to try to pull up the actual numbers. They are not growing at some hyper scaling level. Let's see if I can pull it up. All right, here we go. We got the results. Hims is up big. Yeah, dude, look at this. Dude, this is insane. Why is it even up right now? They're growing 2.6% year over year. That's not a joke. 2.6% year over year. How does Kathy have 800 million in a company growing 2% year over year? Dude, like a lot of things can grow 2% year over year. That's like American GDP is growing at that level. Like you don't buy an individual equity for that. 1.1 billion, fourth quarter enterprise revenue 667 million, free cash flow 351, or sorry, operating cash flow 351. Operating cash flow margin 35%. That's not bad. And then $1.5 billion share buy. This stock is only up because of the buyback. That's it. That is literally it, dude. That is the only reason. There's no other reason I would imagine. Are they not profitable? Wait, they're not profitable? Zoom's not profitable? Hold on. GAAP net income. Oh no, they're profitable. Okay, so they're up. They made 95 cents a share, which is better from last year. Last year they lost 36 cents a share. Okay, so that's good. They're profitable. But again, the revenue growth it's flat, dude. 3.1% year over year, 4.5 billion. That's tough, dude. Like I'd rather be invested in HIMS. I bet like you can say Zoom is a better company than HIMS, but at the end of the day, we want to be invested in growing assets. And HIMS is growing, dude. 16%. All right, let me pull up their IR. Let's see what I can get there. Because we don't have the HIMS numbers yet. Financials, quarterly results. Okay, HIMS still did not put it out yet. HIMS did not put it out. Let's go on Twitter. HIMS did make a profit though, so that's why it's up. Yeah, ARK has a lot of Unity too. I forgot. She has a crap ton of Unity. So HIMS subscribers grew to 1.5 million. That's up 48% year over year. And again, their guidance is above 120 million, which is good. 1.2 billion. SoFi, by the way, was up 5% today. We'll talk about that in a second. But that's the core numbers. They're up 16%, $12, 10.27 to $12. You know, that GAAP profitability number, that was big for them. Unity, wow, they're down 12%. Unity is down 12%. They needed to be GAAP profitable in this economic environment because if a company's not GAAP profitable and they have a low market cap, HIMS is what, 2 billion? HIMS is 2.18 billion. They're seen as like a IWM stock that needs interest rates to come down in order to make money. And HIMS, I don't think is that company. HIMS is much, much stronger than one of those companies. So they needed momentum. And they didn't really have it for the past couple quarters. Okay, here we go. But here's Unity. Unity. Revenue for fourth quarter, 609 million. Increase of 35% year over year. That's not bad, dude. That's a growing business. Unity and Unreal Engine are kind of, I would say, pseudo monopolies in this gaming space. And I want to hear today what they're going to talk about in regards to spatial computing. Obviously, they had that partnership with Apple. That's when they spiked to 50. Now they're much below that. But I would argue they're a monopoly in this gaming space, particularly for some of the stuff that they're doing here. GAAP net loss was 254 million, so they are not profitable. It's a little bit better than last year. They lost 30 million less, which is not amazing, but it is better. And they're up 35% year over year. Revenue 2.1 billion. 2.1 billion. 7 billion in cash on Unity. Really? That's actually very interesting. 7 billion in cash? How the hell did they get 7 billion in cash? That's actually, I mean, that's interesting. I think that warrants a look. So they lost 254. Why are they down? They're growing 35% year over year. It's not like the street expected them to be profitable. I don't know why they're down 11%. Dude, what did they say? Is their guidance that bad? Hold on. I'm going to see if they have a lot of debt. I don't think they have a lot of debt. Unity has, okay. So what I'm looking at is that Unity has 2.7 billion in debt, 1.5 billion in cash. I don't know who said 7 billion in cash. That might not be happening for Unity. Okay. So they do have a decent amount of debt and they have half the debt in cash, which is not horrible. It's nothing like Palantir though. That has 3 billion in cash, no debt, but still 35% year over year is nothing to scoff at all. They made 200 million in net, Unity lost money, 284 million, 255 million. Zoom made about 298 million in net income, up 10%. Like again, Zoom being up 10%, that's good, but it's just not, I don't know, dude. It's not exciting because it's Zoom. I mean, Zoom used to be a $500 stock, dude. And 2% year over year growth in revenue. I don't even know why. It must be up just purely on the buybacks. Street's happy for the buybacks. They missed Q4 EPS by 88 cents. Okay. That makes sense. Well, that makes sense because last year they lost 284 million. This year they lost 255, which in a year, if you only lose 30 million less, I mean, fiscally, you just did not increase shareholder value in the context of earnings per share. So that makes sense if they missed expectations by 88 cents there. Now, that might be a dip worth willing to buy because honestly, Unity is a high growth company. And if you're doing 35% year-over-year revenue growth, yeah, you can miss on EPS. Like, that's not that big of a deal. You're going to get punished for it, but you can miss on it. And maybe that's actually a really good opportunity for a dip. I haven't done a lot of DD on Unity, so I will put that on the list, but something to look at. Palantir ended for the day at 23.51. Robinhood is up 15.60. It's actually up after hours. Okay, let's talk about this one real quick, then we'll get back to earnings. Palo Alto Networks is up 7% today. Why is it up 7%? Because the best trader of all time, Nancy freaking Pelosi, bought $1 million worth of $200 strikes in the money, deep in the money call options. Why do people do that instead of buying the stock? It's just a little bit cheaper on the delta of the option, buying super in the money. She's betting by January 2025 that Palo Alto Networks will be above $200. I think at this point, all we need is Nancy Pelosi to buy Palantir, and we will never have to worry again about Palantir. And I'm very serious about that. I'm not even being facetious here. You like that word, right? Facetious? That's a fucking dope word. But I think if Nancy just buys Palantir, we're good to go, dude. Like at this point, she told us what she was doing with NVIDIA and we didn't all believe her. I didn't believe her. I should have bought more NVIDIA. Here you go. Palo Alto Networks. The stock fell 30%. Obviously, she felt and her financial advisors felt, or I think it's just her. I think she's staring at Webull all day and she's doing what I'm doing, except she's running Congress, which is it's a little weird that she's doing what I'm doing. But there's no way she buys 50 call options, strike price $200, expiration date January 2025 without really caring about the markets. She obviously cares about the markets, and this bad boy's up 7% because it didn't deserve to be down 30%. And so Pelosi bought. Kelly said it would be doper if you could pronounce it. You guys know I struggle with the S and the H. You know my lips are weird. Did I ever tell you the story where my kindergarten teacher, Miss Wingo, that's her name. Literally, her name is Miss Wingo. I remember that because we used to make fun of her name. Miss Wingo made me step in front of class, and she made me pronounce the word she, and I could never do it right because the S and the H, I don't know what happens with my lips. And she embarrassed me in front of class. But that's when I realized I had a thick skin because, like, I didn't care that the kids were laughing at me. Like, I didn't go home. I didn't cry. Like, oh, Miss Wingo. I was like, I thought it was kind of funny that I couldn't say the S and the H correctly. Even though I remember, dude, this was like 20 years ago, but I remember she put me in front of class. She said, say this word, and I couldn't say it because the S and the H. So I think that's why I can deal with all the abuse I get in the chat, quite frankly, because I was used to it from a young age. Hims up 15.32%, Workday down 5%, Car Gurus down 13%, Zoom up 11.2%. Let's see if CNBC is covering any of these other guys, and then I want to talk more about crypto. We're going to be listening to Hims. What time is Hims? Hims, when is Hims speaking? Events and presentations, events calendar, Hims, call, webcast, 5 p.m. Okay, cool. So we got 40 minutes. And then we'll listen to Hims. Imnop says, I got kicked out of choirs in elementary school because my teacher told me I couldn't sing. Dude, why are teachers so mean? Doesn't matter if you know how to sing in elementary school. You're just doing it for fun, right? Like, that's intense. Hood is 1570. Holy crap, guys. Oh boy. I mean, okay, CNBC is not talking about it, so we can talk about some stuff. Yeah, I didn't expect Hood to run the way it did today. I did not expect that, and it did. It fucking did, dude. It ran $15.72. It ran. This is, the reason this is really cool is because you guys know my story with Hood, dude. In December, I actually sat down with my dad today. So my dad, like, this is why Robin is so special to me as well. My dad has like $12,000 in his investing account. And he's getting more interested in it. And I was showing him what I did in December. And so I showed him the call options I bought. And I was like, Dad, you saw me up at 5 a.m. on December 3rd talking. You had no idea what I was talking about. This is what I did on December 4th. And I showed him the history. I was like, I bought, $45,000 of these options because I finally came to a thesis. And for someone who's as indecisive as my dad to see his kid be that fucking decisive to drop 50K into these fucking options. And then he's seeing the return, right? Like it's really cool. So it's cool to see the story play out. I still think it's ridiculously undervalued. And I'm not just saying that to say that. I did the math today in the morning. I did the math on Twitter. It still, to me, is ridiculously undervalued given what's going to happen with crypto. If crypto shits the bed, Robinhood will probably shit the bed a little bit, but not as much as some of the miners. So I think there's a margin of safety there. But it doesn't seem like Bitcoin shitting the bed, dude. When Bitcoin gets to 60 or 70K, what the fuck do you think is going to happen on Robinhood? It's gonna do its thing. It's gonna do its thing. So we'll see. We'll see what happens. But right now it's up 1572. Proud dad seeing his son gamble with 50K. See, the thing is, it wasn't gambling, dude. It was pretty obvious. Like and it's, yes, in hindsight, you can say that, and I know you can say that about anything, but this was a calculated decision on December 4th where I realized what the fuck was happening, and then you take a risk. But in life, you have to take a risk, right? I just don't think it's putting it on black. Like I think that's a very naive way to think about, taking a very big bet on options. I think it was an asymmetric bet. That's what I think it was. SoundHound. Okay, so what the hell is going on with SoundHound, dude? They're up 46%. They're up 46%. I have no idea why SoundHound is up. If anyone knows in the chat, let me know. I'm going to search them up on Twitter. I don't think any news came out about these guys. SoundHound. They have earnings on the 29th. Yeah, I know they have earnings on the 29th, but I don't know why they're up. I really have no idea why they're up today. AI. I mean, yeah, it's AI, but still. I tried to talk to my parents about options and explain the basics, but they still looked at me like I was the biggest gambler in Las Vegas. Yeah, I mean, look, it is what it is. It's about how you explain it. I taught my dad what a spread was, and like he was able to explain it back to me. I was like, it was so cool, dude. It was so cool to see him understand it. But yeah, why the hell is SoundHound up? All right, I'm gonna get some news on SoundHound. Let's take an alternative perspective on Google. So we heard the bear case on Google. Let's hear another reason for why Google is not dead, and actually why they are going to be fine with their search business. So let's take a look at this, and then we'll be back with some SoundHound stuff. Here we go.
Lead us to our talk to the tape. Just how much trouble is Google's generative AI effort in? Has it lost too much ground to Microsoft and others? Big Technology's Alex Kantrowitz is with us on set today, along with our own Deirdre Bose, who covers the company. Dee, I'm going to begin with you on how Alphabet got into this latest mess in the first place. One some are calling embarrassing now.
Yeah, so essentially, Scott, Google was trying to be politically sensitive. Remember that its AI strategy, it's not to be first, but to do it right. So that whole slogan, don't be evil. So try to be politically sensitive, but instead the opposite has happened. Google has found itself at the center of a renewed culture war. Its image generator, for example, criticized for creating diverse images of the founding fathers and Nazi-era German soldiers. So a different kind of diversity problem that Google admits itself missed the mark. Now, its chatbot has been found to have similar problem in a few high-profile examples. Gemini refused to condemn pedophiles and equated Elon Musk with Hitler. Some posted different answers from ChatGPT to the same question and suggesting more straightforward stances. Now, Scott, I tried to replicate some of those searches, and I couldn't for the most part today. In some cases, Gemini, though, simply said that it couldn't assist with the query, while ChatGPT did give at least some kind of answer. And I guess it just speaks to a broader issue, which you touched on, around Gemini's rollout. It's whether it underscores a painful corporate reality for Alphabet and CEO Sundar Pichai. That question that you started your show asking, is it losing ground here, or is this a blip?
Yeah, well, the shares are obviously reacting. Let's bring in Alex Kantrowitz, Big Technology founder. He's here with me on set. How big of a deal is this? How serious is it?
Yeah, it's a big deal because it's not just about Gemini making a mistake, but it really suggests that there's more organizational incompetence within Google. You know, people are trying to portray this as Google got too woke. Even a woke Google wouldn't want Nazis portrayed as people of color. It's just crazy. So it's more of a testing. Where was the testing here? Where is the organizational competency to roll out a product that even if you're trying to encode values into it, you can't? And that to me is the red flag here. Who's running the ship at Google and allowing this stuff out of the door? This isn't just a minor battle. This is a huge battle, and they're falling behind.
The moat, okay, that they have, everybody knows what we're talking about, is search, right? Mm-hmm. The behemoth. Alex, how much at risk is this, if at all, when you hear that OpenAI is said to be developing its own?
Not as much as I think a lot of people imagine, at least in the short and midterm. Now, you look at what ChatGPT and Bing and Perplexity have done in recent times, and it's been impressive. They've built impressive products, but Google's lead in search hasn't really shrunk at all. And I really think that, at least right now, you're looking at two different products, right? Perplexity, Bing, ChatGPT, these are curiosity agents. Anything you're curious about, you type in. You can also use it for other new novel applications. Search really is web navigation. You're not going to use these chatbots for web navigation. You're going to use Google for it. So I don't think that Google search is really immediately in danger of being replaced or even really.
Now, look, I mean, he's right. Google's not immediately in danger of being displaced, but the problem is Gartner came out with this study today saying if search traffic starts to decline by 25% by 2026, I mean, dude, like this is not going to be good for Google. Remember, Google is because I started realizing like and I didn't buy into this thesis until I started really seeing a company like Perplexity. Like everyone that was big in Silicon Valley, the CEO of Shopify was like, oh, I'm using Perplexity every day. And I was like, damn, dude, like people are just using AI more than they're using typical search. Like you don't want to be the person who's, just so far back in the past as new technology is happening, right? And so like AI is new technology. It's happening. And Google only has something to lose, nothing to gain because they have a monopoly on search. It's not like they have 40% of them, they have 95% of the market. If they lose even a percentage point, that's tens of billions of dollars per year. That's gone. And so given I thought the market was also getting a little bit frothy, I just felt like it made sense to get rid of it. I didn't know this woke AI thing would happen. That's not why I sold. I didn't even know that. I literally sold just because I was like, I'm feeling a little uncomfortable with it. So here's an article that came out today. Google's Gemini AI gaffe, Sundar Pichai should be fired or resign. So you're getting articles today basically calling on the resignation of Sundar Pichai, which is tough. It's a very, very tough thing, I think, for Google to have to deal with right now, given what's going on. Google stock right now, currently after hours. Let's take a look at some of these equities and then we'll get to some of the other numbers we have. Google right now, out of the Mag 7, it was one of the worst of the day. So everything's red after hours, but things were pretty green for the day, or they ended flat. Google's actually up a little bit, 0.11%, down about 5% of the day. NVIDIA, pretty much all of Mag 7 is down after hours slightly, but Google was down 4% of the day. Now, here's the question. Just because Google's down this much doesn't necessarily mean it's a dead company going to rot. And as a result of that, you're going to have people that I think are going to pick up Google at this level because at 138, the PE now almost below 25. It is obviously the cheapest on a PE basis of all the Mag 7. If they can resolve some of their culture issues and simply issue a buyback that's more intense or a dividend, I don't think it's the worst buying signal, quite frankly. I asked this question today on Twitter, and a lot of people ended up saying, you know what? It's like, we don't like it, but it's down a lot. I personally wouldn't buy it because I'm not convinced that search is going to continue to be what it was in the past. So to me, on a pure business perspective, it doesn't make sense, even if it's undervalued, because if you're betting on the future, Google search is not the future. So until they really monetize generative AI, I don't think it makes sense to own Google for the long term. And if you're buying it for a trade, maybe, but even for that, there's better things than a trade on Google, given where the sentiment is right now. Is it Meta at 88? I don't think so. I think Meta at 88 is a little bit more appetizing than Google at 140. Remember, Google's still up 50%. It touched 90. It stock's at 140. It's still up a lot from 2023 or from the beginning of 2023. So I wouldn't say it's necessarily deep value at all. I would say Google's in one of the worst positions in the context of a stock. It's not deep value. It's cheaper than the other Mag 7, but a lot of the Mag 7 have run up. It's up 50% from last year. And they have this massive employee base that has a huge cultural stagnation going on in terms of the idiosyncratic ideals that the company believes in, like forcing social justice via their AI. And so I don't know what the bull case is for Google other than, yeah, maybe it's cheap, but I don't know if it's cheap enough for investors to really get excited. And we'll see. We'll see over the next couple of weeks what happens. But so far, I don't know if it's the biggest buy in the world. Look at the right-hand side of my screen or left-hand side of my screen. Crypto is green. Crypto is really, really green. Cypher was up 12% of the day. Iran is up 11%. Marathon was up 21%. Dude, Marathon, this stock fell to where did it fall to? Hold on. Marathon fell to basically $15. So it's up 100%. It fell to like 18, 17 bucks back in January 31st. Same thing with CleanSpark. CleanSpark right now is up another percent after hours, $20.53. CleanSpark fell to $6.50 on January 19th. Coinbase, oh my God. How did no one in the chat say Coinbase? No one. Coinbase is almost $200 freaking dollars, dude. Like now I realize why Hood ran. I thought Hood was kind of running by itself in terms of the brokerage. I didn't even get a chance to look at Coinbase. Coinbase is 196. Remember, they IPO'd at 250. So Coinbase is now up more than 6x from the lows. It was at $30. Now it's at 196. It's up 16% today. I did not see Coinbase all day. That is incredible. And so the thesis of Bitcoin going up, Coinbase is going up. Yeah, that's happening. Dude, if Bitcoin gets back to 70, 80K, which post-halving, that's when most people are projecting. And again, retail's not in. I cannot stress this enough. Retail has not bought Bitcoin. It is all institutional. That's it. It is all these ETFs. Every day we're seeing 59,000 new Bitcoin go to in total in the ETFs, 3,000 to BlackRock, 3,000 to Fidelity. All these guys are getting as much as they can. Juicy institutional custodian revenue flowing at Coinbase. And then, Robinhood being one of the platforms that retail is going to get excited about, and the market's trying to front run that before it ends up happening, because it will happen. This is ARK's biggest position. That's why ARK's up. I forgot. ARK's up 3.4% because of that. They're not up because of Unity or Zoom. They're up because of Coinbase. Walmart had a 3-for-1 split. They were up 1.85% of the day. So Walmart is up. Not too bad for Walmart. Target, Lowe's, and automotive, Advanced Auto Parts. I think that's one of the companies. There's another automotive company. They're reporting tomorrow, and Macy's. So we're going to get a ton of retail sentiment in terms of where the consumer is. Domino's reported today. They were up 8%, right? Yeah, they're up 5% of the day. $1 billion in buybacks, increased the dividend by 30 cents, and they beat on revenue and EPS. So it made sense for why Domino's went up. People are still eating pizza, which is good to know. And that's why we saw Domino's do well. It seems like a lot of companies put up the numbers that they needed to put up during these earnings. And some companies fell, like Palo Alto Networks, but not enough for the market to get scared. Just not enough for the market to get scared. Palo Alto Networks now up 7.33% on the day. Mark says, why buy Bitcoin when you can buy Solana? I mean, that's an ideological difference of if you believe in Bitcoin or Solana. In general, the way I think about it is Bitcoin is the asset class via these ETFs that is going to be in pension funds. It is going to be in people's retirements. It's going to be in people's, portfolio allocations, institutional investors. If they're feeling, they want to get some allocation to it, they don't want to buy Bitcoin. They just buy the ETF. Look, ARKB was probably up, 5% today? ARKB, which is Kathy's ETF. Up 6%. IBIT probably up 6% as well. I mean, it's 6.72%. I mean, it's the same shit as Bitcoin. Bitcoin literally is up 6%. The ETFs are up 6.3, 6.4. I mean, it's a great proxy. And as that money flows in, these guys are going to have to buy more Bitcoin. And the shit's just, and when the halving event happens, it's not rocket science, really. It's really not rocket science. And I think the derivative plays on Bitcoin, like a Robinhood, like a CleanSpark, they all have momentum baked into them for this year. In fact, those are the small caps, in my opinion. I know they're not technically small caps, but those, CleanSpark, more of a small cap than Robinhood, but those are the small caps that I think will do well. I think 2024 is going to be the year of small caps that have catalysts. Small caps that have catalysts. I don't think it's going to be just naturally IWM and TNA, these ETFs on small caps go up. I think it's really going to be about where are the catalysts. And the catalysts for small caps are based in crypto. And there are a bunch of companies that are small that have crypto catalysts, and I think those companies are going to do fine. iRobot, what is their? I didn't even get a chance to look at these guys. iRobot, they had earnings today. Oh wow, they're up 13%, 14%. Let's pull up their numbers. iRobot, they were supposed to get bought out by Amazon, if I'm not wrong, and then I think the EU stopped it because they're communists. But outside of that, that is something that happened. Okay, here we go. Here we got the results. All right, here is iRobot. I don't know about this company at all. I think they made the thing that cleans your house on autopilot. Revenue was $307 million compared to $357. That's not the best. GAAP net loss was $228 versus $307. That's good. So they missed on revenue. They beat on EPS. They're still losing money. Revenue declined about $200 million. That's not the best. GAAP net loss a share was higher than 2022. And okay, so they missed on revenue. They missed on revenue. They kind of beat on EPS, but full year they missed on revenue and EPS. But for the quarter, they beat on EPS. CEO says, as we shared last month, we were actively implementing our operational restructuring plan, decided to both stabilize the business in the current environment and advance our growth initiatives. Okay, so I think the market is giving them a little bit of grace because they were supposed to get acquired and they probably had so much, they didn't know if they were even going to be a public company that they're giving them a little bit of, it's okay kind of that the quarter wasn't amazing given they thought the company was going to be a strategic direction. But they are up 15%. So they missed on everything. But I guess the market is happy they didn't miss as much as they thought they would miss on. So that's why they're up. Hims is up 15%, $11.84 right now after hours. Zoom up 11%. We're going to be listening to the Hims call in about 20 minutes. Workday down 6%. Clean Spark is up 24%. It's up another percent, guys, after hours. Dude, that's incredible. SoundHound is tanking. SoundHound is down 10% after hours. Dude, this is a company I know everyone wants to chase it. In my humble opinion, I don't think this is worth chasing. And Lunar, that thing's down 35% today. That's down another 2% after hours. I don't think that's worth chasing either. Pelosi bought Palo Alto Networks, Adam. By the way, Pelosi's from Palo Alto. So we should have seen that coming. I mean, she loves Palo Alto. She loves California. So she probably was, Palo Alto Networks, Palo Alto. There's some kind of, maybe she was just like, fuck it. We'll just buy in the money options on this shit. Maybe that's her due diligence. Maybe it's a little bit more advanced, but that's what she bought. So SoundHound down 10%. Look, it's up SoundHound now. SoundHound is up 150 for the year, I think. And it's happened in like 5 days or like 2 weeks. SoundHound is up 149 year to date, dude. I don't know, man. It's risky. And look, I listened to the CEO talk on Friday. He's not really inspiring, is all I'll say. He's cool, but he looked like he was nervous and sweating on CNBC, dude. He did not look like he was a CEO that can necessarily inspire a ton of retail. And he's going to be talking to a lot of retail on Friday. I mean, they're going to be listening to him for the first time ever. There's going to be millions of people listening to this guy. So I don't know. I mean, I wasn't super excited by him, but Jensen Huang invested, and that's why the stock's up. The crazy thing is they only invested $2 million. They only bought $2 million worth of this shit. It's not like they put a lot of money. Like for a company like Nvidia to drop $2 million into it's not like they are like, oh yes, this is like the next big AI voice processing company, but like retail's running with this. And this feels very bubbly. I don't think the whole market's in a bubble, but shit like this definitely feels like it's not necessarily the best. CleanSpark's up 1.43% after hours. CleanSpark is up. Yeah, I saw Hims. Hims is up 16%. Robinhood is up 15.72 after hours as well. Rivian's down a little bit. Someone made a good point about Rivian. Rivian's trading at cash, but if they're losing money, technically in a year or in a couple quarters, they're not going to be trading at cash, which is a really good point. I never thought about it today. It was actually very profound. It was like a revelation. Like when a company's trading at cash, if they're losing money, they're not really trading at cash because they're losing the cash. So it's something to think about when we think that Rivian's cheap. It's like, well, they're burning money, and if they don't have a plan to not burn money, then they're not really cheap because their market cap will be more than the cash they have on hand in the next few quarters. Costco 745, Nvidia 790. Nvidia's down a little bit after hours. Oh, let me show you guys some options trading. Let me show you guys some options today that were happening. There were plenty of them that were being traded this morning. By the way, let me know if you guys did any selling today. Did anyone do any selling today? Where's this chart? Where's the chart? I posted it on Twitter. If you're not following on Twitter, make sure you're following Twitter. Okay, here it is. So I'll put the Twitter in the chat. Make sure you follow that. Okay, so, I mean, this was pretty remarkable when I saw this morning. All right, most active options. Tesla had 1 million contracts traded today. 60% calls, 62% calls, 37% puts. Nvidia was second with 651,000 contracts, 60% calls, 40% puts. And then Hood and Palantir. Hood had 197,000 contracts, 78% calls, 22% puts. Palantir, 191,000 contracts, 70% calls, 30% puts. So there's a lot of options momentum. I mean, this is momentum that the put to call ratio in general is just massive right now. I mean, look at Walmart. Walmart, 85% out of the 188,000 contracts were calls, 15% are puts. So people are hedging. And you could say, I think a lot of this stuff with the puts are hedging more so than necessarily being bearish because there's basically, if you look at the numbers on the call percentage, it's 60, 70. So let's just call it 65, 35 across the board, calls to puts across Palo Alto, AMD, Rivian, Amazon, Micron, ARM, Robinhood, Palantir, Walmart, Nvidia, Tesla, Google, Apple. Like all these companies are getting massive amounts of options volume. And it's indicating that the street is bullish. Or at least option traders are incredibly bullish on the next 6 months and what's going to happen. Why is no one talking about Palo Alto Networks and NVIDIA news? They just teamed up. I think I saw something about this. So let me pull it up. Palo Alto. I think I saw this, but I didn't get to see. Yeah, here we go. This was the news. It was on 5G. This is another reason why Palo Alto is up outside of Pelosi. But I would imagine Pelosi knew this before the news came out, obviously. Palo Alto Networks jumps as it teams with NVIDIA and others to provide private 5G security. Along with NVIDIA, this includes a bunch of other people. Palo Alto Networks collaborating with NVIDIA and several other companies to provide private FG or 5G. The news sent shares of Palo Alto Networks higher. I don't even know why this is going to be that big of a deal, but you put NVIDIA in the name, it's a big deal. Like, honestly, I mean, look, it's probably a big deal. 5G, all that stuff. Yeah, that's cool. Enterprise gate security, yada, 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 whatever. But NVIDIA's, if this was Microsoft, this would not be the same. If this was Google, it definitely wouldn't be the same. Like, oh, your 5G is going to be woke. but it's fucking NVIDIA, dude. It's NVIDIA. So if it's NVIDIA, we're gonna see some momentum there. Some people said they sold some of their HUD leaps. Okay, so let me tell you guys something. I sold. So first of all, let me tell you the mistake I made on Robinhood in my Roth. Okay, my goal with the Roth. What was my goal? To take the 14,000, the 6,500 I put last year, 7,000 this year, and I dumped it into Robinhood $25 2025 options at 52 fucking cents an option. I did this when the stock was at 1050. I was like, I think it's the bottom. I was like, I really, really think it's the bottom. And then before earnings, I saw Affirm and PayPal take a shit. And I was like, fuck, I should sell half of them. I had 277 contracts. I sold 140 of them. I had 150 left. And I was like, well, let me sell half of them and do some risk mitigation, because if Robinhood's not profitable, which reasonably you would expect they wouldn't be profitable because they paid so much money to get people on the platform, I was like, let me not like be all in options in the Roth. Well, Robinhood did very well. And then I sold the remaining 150 options at an average gain of 50%. So I made $5,000. If I had just left the 277 contracts, bought at 52 cents, today they would have been worth $33,000. I would have taken 14,000 and I would have made 33,000. I would have taken 14 in the Roth and bumped it to 33 in 2 weeks if I had just stuck with the plan, because that was the plan. That was the initial plan. And then I overthought it a lot. I think I was doing healthy risk mitigation, but honestly, Robinhood at that valuation probably deserved to just let it chill. Now, granted, I'm not super upset about it. It is what it is. You can't kind of kill yourself. This mindset's more toxic. I'm just saying it to tell you guys, like, I'm openly admitting what happened. If I had just held those, we would have doubled the Roth. We would have done 4 years of Roth allocation in 2 weeks. Like, and I don't think this is the same as like, oh, if I bought NVIDIA when it was 200, like, no. Like I wasn't even touching it. I had the options. Like I literally had them. Like they were in the palm of my hands. I just got rid of them because I didn't expect us to burst to fucking 16 within 2 weeks, dude. So it is what it is. Now, thankfully, the main position is still intact, and that main position has been doing well. And that's for 2026, so that's safer. But yeah, dude, I would have sold it today if I'd kept those options, because my goal was to double. My goal was I'm going to take the 14, I'm going to double it to 30. That was my goal. And I was like, the delta is 0.17. All Robinhood needs to do is get to 15. It was at 1350, which is asking a lot, but I didn't think it was crazy. And then I doubled the position. I more than doubled. Today those contracts are worth $1.30 actually versus $1. $1 would have doubled it. But then I got nervous and I got out of it. So it is what it is. It is what it is. But that is what could have happened if I kept it. And now I think everyone deals with this, right? If you're playing in the markets, I would have, I should have, I could have, as Arthur says, yeah, we all got to deal with this shit. But it is what it is. So Amit, are you out of the HUD options? No, I still have a shit ton of them. This is just my Roth, dude. The goal was to double the Roth and make like a legit YouTube portfolio with 30 grand. And now the YouTube portfolio is 18 grand. And I wanted it to be 30. And I thought that was the best opportunity, which I was right. I just got too scared at the end. So yeah, it is what it is. Philip says you're trying to time the market with options, get why it's gambling. Yep. Well, yeah, but again, if you do weekly or monthly options, I understand why it's gambling. If you do 18 months, 24 months out, I genuinely don't think it's gambling. You have at least a year and a half before theta really kicks in, which lets you know if the thesis plays out or not. And I mean, if you're doing options on something, you expect within at least a year and a half for the stock to go up, right? I know whenever we invest, we expect the stock to go up, but like, I wouldn't do options on Google because I would be buying it at 139, hoping that in a couple of years, maybe it gets to 300, not even a couple of years, maybe like a decade, right? Maybe 5, 6, 7 years. But if I'm doing options on something like a CleanSpark, I'm expecting that bitch to go up to $20, pretty soon if I'm buying it at 15, because I think that there's momentum behind it. I thought there's momentum behind Robinhood, and so far I've been right. And I think we can look. I think Robinhood can go back to $12. I think we can get a massive pullback. I think that can definitely happen. The thing is, it would need Bitcoin to get back down to like 46, 45, and I don't know if that's happening. So that's I think it's more sophisticated simulations of potential outcomes versus gambling, I would say. That's how I would call it. It's timing it, but it's timing it in a much more strategic way. Like, you're not timing it tomorrow, right? You're giving yourself time. That's with timing it. It's so it makes more sense in my opinion. And it's asymmetric, which is the way it works. Or hopefully the way it works if you get into that type of position. So it is what it is. Yeah, Christian says, think you should just be happy with the gains. It could have gone the other way. That's the thing, dude. Robinhood could have not been profitable. Stock drops to $9-8, and then it's just, dude, I really did not think that was going to happen. That's the thing that bugs me about this. Like, the DD was so intense for Robinhood that I really felt I had figured out the valuation. And, you know, you never know if you really figure it out, but I felt I fucking figured it out. I figured it out better than Palantir, because Palantir is much more complicated. 2 billion shares outstanding, like all this shit. Like, I thought I had really figured it out with Robinhood, and I did. But then I just got nervous. I got really nervous, which it is what it is. It happens. What are we going to gamble on next? Okay, so let me make this point. I don't know if there's any companies worth buying options on now, guys, in the market. I think the time to buy options is gone. I said this on Friday. With a screen as green as this, what we're looking at, I don't know if there's a lot of companies you can buy options on. I mean, like in a really sophisticated way. I do think Robinhood options are still cheap. There's a bunch of strikes and expirations that I think are relatively cheap. But I don't think they're the deal that they were, 3 months ago. I don't think any company is the deal that it was in December with some of these options. So I don't know. It's a little bit tough of a situation, but I don't think that means we're going to have a massive pullback, because I think, as I talked about on the morning, there's not really a catalyst to see a big sell-up. I just don't see where the catalyst is. I don't see where the catalyst is coming on. Oh, TFC. TFC had a tough day. Yeah, TFC was down 2%. By the way, guys, we had the call on HIMS in 12 minutes. So we've listened to HIMS in 12 minutes. TFC was down on top of regionals, dude. I don't understand why regionals are getting hit this bad. I have a big TFC position of 50 spreads expiring 2026 for 45 strike. Actually, they're already in the money. The short end of the call is 32, so they're already in the money. But I think TFC is ridiculous. I think this was a company I think we should buy in the Roth, by the way. I think TFC, let's go to the Roth. I think TFC and SMH are the companies that should be in the Roth, quite frankly. Like, look, either we gamble the Roth, not gamble, we do hypothetical simulations of potential outcomes on the Roth in the equities market or the options market. But I just said it's really tough to buy options right now because everything's run up so much. So I don't know what the hell we would buy the options on. Or we get some TFC and some SMH. So this ETF I've been getting kind of excited about. This one was up about 0.82% on the day. Year to date, it's up 21%. Past 5 years, it's up 300%, dude. If we compare that to the S&P past 5 years, it's up 80%. So that one is up about 4x more than the S&P. Now, someone may be saying, well, the S&P is way more safer, and you may be correct, but I think SMH is only unsafe as like a 5-year play, which if we're buying it in the Roth, right, that's the goal, to hold it for a long time. If AI and semiconductor demand goes away, and if you believe Jensen, it's not going away. And so, SoFi, that might be the company to buy options on. I forgot. SoFi has been in the gutter. I forgot about SoFi, dude. SoFi has been, that's actually not the worst argument, dude. And if we were going to buy the options, we should, SoFi's up 4.5%, dude. SoFi does not deserve to be $8.54. It deserves at least closer to $14, in my opinion. And I'm not the smartest guy on SoFi, but I think I understand their business well enough. And dude, the thing is 17% short. And this is a more beloved retail company than any company I can think of. I mean, like, this is a company that people love. Like, dude, people are attached to this company. I think when the shorts have to cover, when retail momentum goes high on a really good catalyst, like a really good earnings report, and they sustain $9 or $10, $8.54 is going to look like a steal. The problem is SoFi doesn't have a catalyst. They don't have crypto. There's nothing really there. Like, loans are boring, right? Wall Street's worried about delinquencies. They're barely profitable, and they don't really have estimates to increase profitability in a huge way. But there are, potential catalysts. It's just not massive. But maybe 2026 leaps on SoFi are not the worst decision. Maybe not. So anyway, SMH, I think that would be a good one for the YouTube portfolio, and then maybe SoFi as well. Maybe that's our next play, guys. Maybe our next play is SoFi leaps. I think that might be the play. I'll research more into it today. I think, maybe we'll get SoFi at a better price because it tends to fall off, but we'll see. And also 2026, the other thing about SoFi that's so important in 2026 is it needs to be up or else Noto's not getting paid. Noto has options at $26 in 2026, and he has to maintain SoFi at 26 for 60 days, so 2 months. If he doesn't do that, he doesn't get like $500 million. That dude really wants, I would argue, I think anyone would want $500 million. So like he is heavily incentivized. He just has to get the job done. I don't know if he would get the job done, but one could argue that, that's something that he cares about. Here's Jamie Dimon. We got 8 minutes of the call. Let's listen to him talk a bit. We had an interview with him today about the state of the markets. Here we go.
All of that in just a few minutes. We do begin.
Makers, investors, all kind of coming together to talk about the financing environment. Yeah. How would you characterize C-suite confidence levels now?
First of all, thrilled to be here. Thank you for doing this. This is our 29th conference. I've probably been to 20 of them since I became CEO of JP Morgan Chase. You always got to look at markets that they change their mind pretty quickly. But right now, confidence is up. There's more M&A chatter. Equity markets open a little bit. Spreads are getting close to historical lows, which means there's a lot of money chasing high yield deals. So things are kind of open. Markets are high. People feel it. So far, so good.
That sounds to run somewhat counter to your more bearish views. I know you said in fourth quarter earnings that last month that inflation may be stickier, rates may be higher than the markets expect. Is that still your base case? And what's kind of fueling that more cautious tone right now?
Yeah, so the way I look, remember in 1972, you felt great too. And before any crash, you felt great. And then so things changed. So you got to look ahead. I do think there are things out there which are kind of concerning. We got an eye on. And why are we doing so well? A lot of it's fiscal spending. And fiscal spending has a multiplier too. So I just think it may not come down that quick, and people may.
So Jamie doesn't sound that bearish. Remember a couple months ago, he was like saying like, oh, we're like in a tough situation. Things are bad. Like, Jamie didn't sound that bearish just now. Jamie just said, look, there's a lot of reasons why markets are reacting this way. Fiscal spending. It's like, yeah, sure. Fiscal spending. Great. But like interest rates are the highest they've ever been. So like the fact that the market's performing like that, like, here's the thing. I asked the chat this in the morning. Let me ask you guys. We got the call in 6 minutes on HIMS. What company is massively overvalued today? What stock is like ridiculously overvalued? Like you look at it and you're just like, that company is a bubble. And don't say like Lunar and like those are the meme stuff. Like what legitimate company is actually in such a bad situation? Because Jamie Dimon doesn't sound as bearish. And I think that tone and his sentiment changing. Remember, this is the CEO of one of the most biggest banks in the world. I know he started selling some stock recently. He hasn't sold in 20 years, but it didn't sound like he was giving a major thing that's coming above the horizon and kind of saying like, oh, there's this epic crash coming. It kind of is like, he's just like, oh, well, the market's up. And he's not kind of giving that massive warning. Microsoft, you think Microsoft's massively overvalued, dude? What's Microsoft's PE? I think that's a little overvalued, but not like massively ridiculous. Their PE is what? 34? Dude, I don't think that's overvalued. Their cloud business is growing 30% year over year. SMCI is not overvalued. It is not. SMCI might be a bubble because it ran up too quick and there's retail speculation, but it's at a 40 PE. It is not overvalued. If you look at their growth estimates, this is like a legitimate price for SMCI. The problem is when it runs up this much, it becomes a meme stock. But I would absolutely say SMCI is not overvalued. I mean, they're projecting 103% year-over-year growth. Their market cap's 40 billion. They're doing 20 billion in revenue. Like I don't think that's overvalued. ARM is overvalued, but that's because there's only 90 million shares outstanding. So they're going to collapse once the insiders dump their shares. But that to me is not overvalued. That to me is just that's overvalued, right? But that's not overvalued for a fundamental reason. That's like a game the insiders are playing with the stock, right? And like if you're smart enough to know, then you know it's probably going to collapse once they dump the shares. And SoftBank owns 92% of it. But that to me is not a classic example. Like in 2021, you could point to any company and say, like Palantir. Palantir was $100 billion market cap, and they were losing like $500 million a year, right? The stock was $45 in 2021. Even at $45 today, we would be like, that shit's crazy overvalued. There's no way in when they were doing $1 billion in revenue that they were supposed to be worth $100 billion. That's what I mean. Are there any Palantirs at 45 in 2021 that are overvalued? That is my question. And I don't know. I don't know if there are. I really don't. Did you talk about Unity? Yeah, we talked about it. They lost their EPS. They missed badly. That's why they're down. You're down 16%. Oh my God. We got to look at Unity and we got to look at Rivian together because there might be some opportunities there. When these companies go down this much, maybe there's something to look at. Robinhood right now down about 0.12% after hours. Rivian's growing 35% year over year. I don't know if a miss on EPS is worth me down 16%. I really don't think so. That's a company potentially we could buy some 2026 leaps on if we really are convicted, because maybe we have a decent discount there, but we gotta go deeper into that. P. Chess, thank you for the $1.99 super chat. HIMS 5 to 10x by 2030. Look, if HIMS keeps up the growth, then I mean that is possible. This is one of the graphics we have right now on HIMS. I forgot to show this one. Revenue growth 86% year over year. Subscriptions 48% year over year. Adjusted EBITDA 428% year over year. EPS up 120%. They're GAAP profitable. They deserve to be up. 5x would put the company at $10 billion. I could see that. I could see them being, if they keep growing like this, or even like 30% of the numbers they're putting up right now. Yeah, 10 billion is very possible. And they're profitable. Dude, they made a penny. That changes a lot of things. LEAP stands for long expiration. And then I forgot the other one. LEAP definition. What does it stand for? LEAP definition. Long expired. Long-term equity anticipation securities. Damn, I did not know that, dude. I probably learned that a while ago and I totally forgot. Long-term equity anticipation securities. I didn't think that A was anticipation. I thought the A was something totally different. But yeah, it's long-term options. Long-term options. Please comment on Sound's movement today. The only comment is that Jensen Huang invested in them a week ago. The street's excited. Not the street. I think retail's excited. I do not think this is big money. And as a result of that, the stock is in a bubble, in my opinion. I don't know what the valuation I don't know if it's undervalued or overvalued, but I do think chasing it can leave you very upset, especially given what's happened with Lunar. So I would not try to chase Sound, dude. I would not try to chase Sound. Roka says buying call options after Pelosi bought Jan 2025 calls. You're talking about Palo Alto Networks. See, I mean, I would put 20, dude. If I buy options on anything, I think it's 2026 now. For things that have run, unless they're like really, really undervalued, I am not touching Jan 2025 because it is far away. But by the summer, your thesis has to play out, and you got to get out of it. And I don't know. I think by 2026, more likely, there's a better chance, even if you pay a premium. Okay, so last quick updates before we get into HIMS. Palantir on the day is ending at 23.52, down about 0.17%, and then Robinhood after hours 15.61, up 0.13% on the day. All right, we've got HIMS. Mario says they would have been profitable before they spent a lot of marketing. Yeah, and the fact that they became profitable and they're an e-com business and they're having this growth somehow, it's another Robinhood to me. The fact that Robinhood was profitable after all they spent on customer acquisition, it's a great thing for HIMS. They should have their call in like 10 seconds. Rocket Lab's earnings tomorrow after hours. Okay, I think we'll listen to Rocket Lab after hours. Probably. Yeah, so we'll do Rocket Labs after hours. And we still have so many later. Snowflake. We have a Celsius, dude. I think Celsius is Thursday. We have a lot coming up. But HPE looks like a buy. People have been saying this. I'm gonna look at that one. I think there's a 3% dividend on that one. Uber's not overvalued, dude. I don't know if Uber's overvalued. I don't think Uber's necessarily overvalued. I think Uber put up some numbers. All right, here's HIMS.
Ladies and gentlemen, thank you for standing by. At this time, I would like to welcome everyone to the HIMS and HERS fourth quarter and full year 2023 earnings conference call. Please note that this call is being recorded. If you would like to ask a question, please press star followed by the number 1 on your telephone keypad. And if you would like to withdraw your question, again, press star 1. Thank you. I would now like to turn today's call over to Bill Newby, Director of Investor Relations. Bill, please go ahead.
Good afternoon, everyone, and welcome to the HIMS and HERS fourth quarter and full year 2023 earnings call. Today, after the market closed, we released our first ever shareholder letter, a copy of which you can find on our website at investors.hims.com. On the call with me today is Andrew Dudum, our co-founder and chief executive officer, as well as Yemi Okupe, our chief financial officer. Before I hand it over to Andrew, I need to remind you of legal safe harbor and cautionary declarations. Certain statements and projections of future results made in this presentation constitute forward-looking statements that are based on, among other things, our current market, competitors, and regulatory expectations, and are subject to risks and uncertainties that could cause actual results to vary materially. We take no obligation to update publicly any forward-looking statement after this call, whether as a result of new information, future events, changes in assumptions, or otherwise. Please see the most recently filed 10-K and 10-Q reports for a discussion of risk factors as they relate to forward-looking statements. In today's presentation, we will also use certain non-GAAP financial measures. We refer you to the reconciliation tables to the most directly comparable GAAP financial measures contained in today's press release and shareholder letter. You can find this information as well as a link to today's webcast at investors.hims.com. After the call, this webcast will be archived on the website for 12 months. And with that, I'll now turn the call over to Andrew.
Thanks, Phil. 2023 was a transformative year for Hims & Hers as we continue to deliver against our mission of helping the world feel great through the power of better health. Strong execution of our strategy resulted in financial success on both the top and bottom line. Revenue increased 65% year over year to $872 million. Growth remains robust as a result of our ability to continue to draw and retain users to the Hims & Hers platform. Over 1.5 million subscribers were on the platform at the end of 2023, representing a year-over-year increase of 48%. We've always taken a disciplined approach to scaling our platform, and that is translating to meaningful success on our bottom line as well. I'm incredibly proud of our organization's ability to scale our platform efficiently and deliver our first quarter of positive net income on the one-year anniversary of our first quarter of positive adjusted EBITDA. Throughout 2023, we continue to excel at providing users with access to providers and diagnosis in days, or in some instances hours, as opposed to weeks or months in brick and mortar, and access to clinically appropriate generic treatments and solutions for singular issues that consumers are challenged with. We view our capabilities to deliver on access as table stakes and believe a sustainable leadership position requires more. My belief is that our success is the culmination of an intentional focus on core specialties, as well as our ability to transform our platform across a few dimensions. Let me start by double-clicking into the significance of focus. Today, our efforts are focused on ensuring that customers have a delightful experience across 5 core specialties: sexual health, men's and women's dermatology, mental health, and weight loss, which we're excited to launch in the fourth quarter. These are some of the most emotionally resonant challenges across society today and impact over 100 million individuals in the U.S. alone. In 2023, we made meaningful strides evolving our platform across a few key dimensions, which has enabled us to capture a leading market share of customers seeking solutions within many of our specialties. First is the move beyond generics towards personalized solutions and treatments that uniquely address users' concern via new form factors as well as multi-action capabilities. Second is our ability to leverage AI capabilities across structured data to not only inform new effective and safe solutions that resonate with users, but also enable providers to leverage learnings from hundreds of thousands of interactions across our platform to more efficiently match users with the right treatment. Lastly, our operational excellence and scale enable us to offer all of this value to users at attractive price points. Nationally renowned experts, combined with our data platform, were foundational to our ability to roll out access to heart support, hard mints, and updated men's hair loss options in our tenured specialties such as sexual health and men's dermatology. Personalized offerings, which have now been adopted by over 30% of subscribers on the platform as of year-end, have allowed these specialties to continue to scale at a rapid rate through 2023. We are confident that substantial runway for growth remains, especially as we continue to evolve our offerings. The shift toward personalized offerings has been even stronger in our newer specialties, as new users are increasingly opting for these unique approaches to individualized care. Hers dermatology subscribers are opting for a personalized solution more than 75% of the time, while subscribers to the new weight loss offering are essentially all opting for a personalized treatment. It is clear to us that personalized solutions drive increased longevity on the platform and help to facilitate the acquisition of new users. As we continue to see increasingly rapid adoption of personalized approaches across newer specialties such as HERS dermatology, mental health, and weight loss, we are confident that each of these specialties has the ability to deliver more than $100 million of revenue in 2025. We are pleased to see the strong momentum of the past 6 years continue into 2024, with continued strength across each of our specialties and margin expansion from our disciplined approach to scale. These factors provide us with line of sight to achieve our 2025 targets of $1.2 billion of revenue and $100 million of EBITDA 1 year early. We are also tracking toward our first year of positive net income in 2024. These are all important benchmarks, but we have every belief this is just the beginning. Our aspiration is to bring tens of millions of users on our platform, given the fact that over 100 million consumers are impacted by conditions in the specialties we serve. Our ability to achieve these ambitions will be governed by our ability to remove points of frictions for users seeking treatment today, as well as remove barriers for those who may be suffering but not seeking treatment. To date, we've excelled at removing barriers and friction points such as lack of awareness, accessibility, and affordability. In 2024, we expect personalization will be foundational to unlocking new opportunities for the treatment of users that may have alternative form factor needs or require unique dosages. We expect MedMatch by Hims & Hers to be a critical tool in giving both providers and consumers the confidence that a treatment will work for them. This is natural in that MedMatch by Hims & Hers has the potential to evolve to address one of the questions most top of mind for consumers. Has this solution worked for people like me? In the fourth quarter, we completed the transition of the vast majority of fulfillment to our affiliated pharmacies, which sets the stage to break down a substantial barrier for users suffering across our specialties today: cost. Over 85% of orders going through affiliated pharmacies provides us greater ability to realize the benefits of scale and ultimately pass value back to consumers in a way that is beneficial for our users and accretive to Hims & Hers. Since we founded Hims & Hers 6 years ago, our goal has been bold: to make the world feel great through the power of better health. Developing the technology, operations, clinical excellence, and brand to achieve this goal of transforming health and wellness requires a long-term approach and an operational mindset. Through the unparalleled experience and expertise of our team, we have built a platform that offers personalized solutions through a holistic and seamless customer experience at compelling price points. Our approach can enable almost every household in the nation to find a level of personalized care that has historically only been available to the wealthiest subset of the population. We are proud of what we are delivering and the positive outcomes we're bringing to our customers, and we are energized by the opportunity we have to bring this incredible experience to an expanding group of consumers in 2024. With that, I will pass it over to Yemi to walk through our financials in greater detail.
Thanks, Andrew. I will start by providing an overview of our fourth quarter financial performance and then expand on Andrew's comments related to our future outlook. We are incredibly proud of the progress made in 2023 in transforming the business into a leading provider of personalized solutions and are excited by how that positions us for the future. Our strong results are the result of sound execution of our simple but powerful strategy, which is to provide users with access to attractive, high-quality, and personalized solutions that are affordable and backed by an experience that is delightful from beginning to end. Our fourth quarter results are a great example of the intersection of great strategy and strong execution. Revenue grew 47% year over year to $246.6 million, driven primarily by the ongoing expansion of our subscriber base. We ended 2023 with over 1.5 million subscribers, up 48% from the end of 2022. Over the course of 2023, we continued to evolve the suite of personalized offerings throughout the year across each of our specialties, including launches of hard mints and chewables in men's sexual health, hair blends in women's dermatology, our first multi-action offering in heart support, and finally our weight management offering, which offers customized solutions designed around addressing the underlying causes of weight gain. Consumer demand for these offerings has been rapid, with over 35% of new subscribers pursuing personalized options in the fourth quarter. Our belief is that this will continue to enable us to drive robust growth for the foreseeable future through, firstly, drawing a broader audience of consumers impacted by a condition to seek treatment. Secondly, enabling us to capture a greater share of users that are currently seeking treatment. And lastly, increasing the longevity of users on the platform. At the core of our strategy is ensuring that these solutions are placed at attractive price points, which we believe will continue to drive both stronger demand and retention. Our shift toward affiliated pharmacies allowed us to offset the margin impact of strategic pricing actions implemented in 2023. Even more exciting is that they provide a platform to unlock efficiencies that will enable us to provide a better consumer experience at even more attractive price points. We exited 2023 with over 85% of orders fulfilled via affiliated pharmacies. Our expectation is to maintain a share of orders going through third parties in the high single-digit to low double-digit levels for redundancy purposes. Investments made in affiliated pharmacies have provided the foundation for expanded capabilities as well as efficiency gains. Affiliated pharmacies allow us to drive efficiencies across key costs such as logistics, product costs, and even customer support. Gross margins expanded almost 4 points year-over-year in both the fourth quarter and across the full year to 83% and 82% respectively, as we were able to identify and capture these efficiencies. Greater scale will continue to allow us to drive efficiency across our operation. As previously mentioned, we will actively pass a portion of these gains back to consumers over the next several years in ways that we believe are long-term accretive. This may be in the form of targeted price reductions and additional value-added services. We believe that mass market pricing, combined with the convenience of our end-to-end experience, will enable us to cement a leadership position across each of our core specialties. Leveraging scale and actively capturing efficiencies is a core trait that extends beyond operations and is embedded in the DNA of Hims & Hers. Over the course of 2023, we gained leverage across the majority of cost areas, with marketing costs as a percentage of revenue improving 1 point, operations and support costs as a percentage of revenue improving 1 point, and G&A costs as a percentage of revenue improving 3 points. Disciplined growth and rigorous cost management are resulting in step change improvements in profitability. Adjusted EBITDA increased 68% quarter-over-quarter in the fourth quarter to almost $21 million. This represents more than a 5x increase relative to the fourth quarter of last year, which was our first quarter of positive adjusted EBITDA. On the 1-year anniversary of our first quarter of a positive adjusted EBITDA, we're thrilled to have generated our first quarter of positive net income. In the fourth quarter, net income was $1.2 million. Attainment of this important milestone is evidence of the strength of our strategy and capital allocation framework, as well as excellent execution across our organization. Our focus remains on continuing to address barriers that prevent consumers from seeking treatment for specialties that we serve, which we believe will result in greater market share capture. We will do so in a way that is disciplined and provides a path to generate positive free cash flow. To better reflect this focus, we have started disclosing free cash flow generated in each period. In 2023, we generated over $73 million of operating cash flow, driving free cash flow of $47 million. We ended the year with $221 million of cash and short-term investments on our balance sheet, up over $41 million from the end of 2022. We intend to leverage the strength of our balance sheet to continue to expand our portfolio of personalized solutions, as well as to improve the efficiency of affiliated pharmacies as they continue to scale over the course of the next 2 to 3 years. This is reflected in the higher capital expenditures in the fourth quarter, as well as for the full year of 2023. Our expectation is that the evolution of personalized offerings will drive continued market share gains and growth in the near future. With that backdrop, I'd like to detail our outlook for 2024. In the first quarter, we are anticipating revenue in the range of $267 to $272 million, representing a year-over-year increase of 40 to 43%. We expect adjusted EBITDA to be between $22 and $27 million, representing an adjusted EBITDA margin of 9% at the midpoint of both ranges. For the full year, we are anticipating revenue of between $1.17 to $1.2 billion, representing a year-over-year increase of 34 to 38%. It is our expectation that 2024 adjusted EBITDA will be between $100 and $120 million. These adjusted EBITDA and revenue ranges imply an adjusted EBITDA margin of 9% at the midpoint of both ranges. Our outlook for 2024 provides line of sight to achieve our 2025 floors of $1.2 billion of revenue and $100 million of adjusted EBITDA a year early. As mentioned previously, continued penetration of large addressable markets across our specialties remains our core focus. We continue to scale in a disciplined way that adheres to our rigorous capital allocation framework. With continued successful execution of these priorities, it is our expectation that 2024 will be our first full year of generating positive net income. While 2023 was a phenomenal year, and 2024 looks to be equally, if not more exciting, as Andrew has always mentioned, the company has a long-term orientation. In that spirit, I'll take a moment to provide additional color on our expectations for progress on the attainment of our long-term adjusted EBITDA margin goals of 20 to 30%. Our expectation is that we will achieve adjusted EBITDA margins of at least low to mid-teens by 2027 and be within our long-term margin range no later than 2030. Margin expansion will occur as we continue charting a path forward toward our ambition of bringing tens of millions of subscribers onto the platform. While further leverage is expected across costs such as G&A and operations and support, a substantial portion of leverage is expected to come from marketing. Our expectation is that marketing as a percentage of revenue will be in the mid-30s to low 40s by 2030. Several factors give us conviction in our ability to drive marketing leverage over time. First, a greater share of our spend is increasingly becoming more semi-fixed in nature. In 2022, and over the course of 2023, we meaningfully scaled investment in broad-based brand spend intended to drive awareness and consideration of our brand to users earlier in their lifecycle journey. As it starts to hit maturity in 2024, we are confident in our ability to get greater leverage on this spend. Second, our belief is that we can increase conversion and retention by offering consumers high-quality, personalized solutions. We have already seen early signs of success that offering personalized solutions enables us to better convert users as well as increase their longevity on the platform. This is especially true when they are placed at attractive price points, as we saw in the second quarter of 2023. As our personalized solutions continue to evolve to encompass multi-condition treatments as well as new form factors, and scale enables us to place them at more attractive price points, our expectation is that we will see continued gains in both conversion and retention. Lastly, our business is based on a recurring revenue model, and the majority of marketing spend goes towards the acquisition of new users. As our user base continues to mature and the average tenure of users on the platform increases, our expectation is that we will gain leverage. These dynamics are expected to drive between 1 to 3 points of marketing leverage per year, with leverage starting to show as early as 2024. 2023 was an exceptional year for Hims & Hers. Momentum looks to be stronger than ever as we head into 2024. We have high conviction that our strategy of providing users with access to high-quality, personalized solutions that are affordable and backed by an experience that is delightful from beginning to end will position us for continued success in the coming years. Our ability to drive the strong dedication of hundreds of employees across Hims & Hers. I'd like to thank them as well as our customers and partners that support us in our mission of helping the world feel great through the power of better health. We appreciate the support of our shareholders and look forward to keeping you updated on our progress. With that, I will now turn it over to the operator for questions.
Thank you. As a reminder, if you would like to ask a question, please press star followed by the number 1 on your telephone keypad. If you would like to withdraw that question, again, press star 1. We also ask that you limit yourself to 1 question and 1 follow-up. And for any additional questions, please re-queue. Your first question comes from the line of Allen Lutz from Bank of America. Please go ahead.
Good afternoon, and thanks for taking the questions. Andrew, you mentioned that Hers Derm, mental health, and weight loss can each deliver more than $100 million of revenue in 2025. I'm just curious, what gives you line of sight into that, and how much do you expect to be cross-sales? And then related to that, what % of your marketing budget is just getting patients to the Hims platform, versus how much is specific to each indication that you're treating? Thanks.
Thanks, Alan. Great question. Maybe I'll take the first half, and Yemi can jump on the marketing side. I think for the emerging categories, this is really exciting, right? We're seeing massive adoption of personalized offerings and custom treatments in those categories. I think we mentioned Hers Dermatology, north of 70% of people are adopting those types of personalized treatments. And with our newest category, weight loss, nearly 100% of people are adopting those personalized treatments. So seeing a really great dynamic with regard to stickiness, high engagement, high retention with those customers. We think that that type of an offering where patients and providers can more nuanced cater to an individual's needs will result in a much stickier relationship long term. And so I think given the size of those markets, which are absolutely enormous, as we know, and the very unique mass market pricing and personalized approach, it just gives us a tremendous amount of conviction that those emerging categories will be meaningful contributors to growth in the long term. But even in the not too distant future, in 2025, just a year after this weight loss category it has gone live, believe those to be able to contribute 100 million plus. So really excited by both the tenured categories accelerating as a result of the personalization, but also the new emerging categories starting to show some very meaningful contributions to long-term growth.
Hey, Alan, thanks for the question. To hit the second part of your question, historically, we've had both targeted as well as broad ads. So many of the investments that we make in areas such as direct response and social tend to be mid and later funnel. Earlier on in the company's life cycle, we still were able to draw consumers' eyeballs, but that was traditionally through things like the retail partnerships that we've oftentimes spoken about. As we mentioned in 2022 and 2023, we really started to scale some of the broad-based brand spend to make users aware of the holistic set of conditions that we offered. So that's less around engaging with the user for a specific condition and more introducing them to the overall Hims and Hers brands respectively. And so in 2022 and 2023, we saw a greater portion of spend come towards that. That's one of the things that also gives us confidence in the ability to get leverage really this year and into 2025, is that spend tends to be more semi-fixed in nature. As you start to implement and integrate into channels, you're not necessarily scaling as rapid of a pace once you reach a certain level of maturity.
Great. And then another one for you, Yemi. As we think about the margin profile that you reported in 4Q, and we think about the margin trajectory into 2024, I'm curious on the gross margin line. It seems like the percentage of scripts going through affiliated pharmacies is going to stay relatively consistent. I think that changed versus the last quarter. So can you talk a little bit about your decision to not get to 100% going through the affiliated pharmacies? Thanks.
Yeah, I think we really always want to maintain flexibility and have redundancy purposes set up. And so, in the near to midterm, we view maintaining those relationships very much as a strategic. As we look to the affiliated pharmacies, as mentioned, over time, we view gross margins going to more of the mid to high 70s. It is probably likely going to take us a few years to get there, just because in the affiliated pharmacies, there are opportunities both in terms of process that can drive higher margins, as well as, as we look to the scale that we have now, that unlocks the ability to leverage our balance sheet to drive greater efficiencies as well. We'll look to pass those back to consumers, but we're going to do that in a very thoughtful way, run dedicated experiments to just ensure that as we are giving that value back to consumers, it will result in long-term value, not only for the consumers, but also for Hims and Hers.
Great. Thank you.
Your next question comes from the line of Daniel Grosslight from Citigroup. Please go ahead.
Hey, guys. Thanks for taking the question, and congrats on the strong results here. I want to stick with the marketing question. And Yemi, I appreciate all the details that you've given so far. But I'm curious, one of your competitors, mostly on the mental health side, mentioned that they're seeing a decline in their marketing efficiency. And you obviously are going to start to see more leverage coming out in 24 and beyond. So I'm curious if you're seeing a similar degradation in marketing efficiency away from the broad brand building, which it seems like is going to be a majority of your investment in 24 and beyond. And then I guess with that, you mentioned that as a greater proportion of your user base becomes this recurring user, you're naturally going to get additional efficiency from your marketing line item. So I'm curious if there's any stats you can provide around retention rates, churn rates, what % of your user base now is on the platform for X amount of months or years would be very helpful.
Yeah, so to take the first part of the question, thanks for the question, Dan. Really our focal point is around still continuing to maintain the payback period of less than a year, which we have been able to do. CACs do, tend to fluctuate across quarters. We've really not seen anything out of the norm, and there's a few reasons, behind that, and some of it is just unique to the way that our platform is positioned. The first is that we oftentimes diversify across a broad set of channels, as well as we're constantly experimenting with new messages, new narratives to consumers, and really the channels interconnect with one another. And so as we started to invest in things like broad-based campaigns, we're seeing that show up in terms of efficiency in some of our other marketing channels. The second is really just the combination of having a diversified set of products across the ecosystem that we can message to users. We're able to rotate capital across our specialties. That really enables the ability to drive greater efficiency across the entire ecosystem. And lastly, what we're seeing is really the differentiated offering resonates with our user base. And as we're bringing both personalized solutions as well as products, those are drawing in a greater and greater set of users. And so we're actually seeing, in many instances, where they're drawing users of the platform, which is resulting in greater share capture across the ecosystem. To the second part of your question, just around, how we're thinking around the overall marketing leverage, ecosystem. The vast majority of our spend actually goes towards the acquisition of new customers. And so as a result, as we continue to build a larger and larger base of existing users that are tenured on the platform, that inherently results in more leverage. And so what we are seeing is that, particularly with personalized products and some of the pricing changes that we made last year, the platform is getting even more stickier than what historically was. And so as a result of that, that gives us the conviction to, start to call the fact that we'll even receive leverage as early this year. And Andrew, not sure if there's anything you wanted to add to that as well.
Yeah, thanks, Daniel. On the mental health side, one thing to point out, I think there continues to be a lot of investment in that category, specifically on the clinical excellence side with MedMatch and our AI capabilities to be able to better predict how a patient is going to respond with different medications. And obviously, the trial and error that comes with mental health treatment is quite brutal. So I think over time, we're going to see a stickier relationship with those customers. I think increased confidence in the brand, increased trust in the brand. And so that category continues to be one of our highest growing specialties, like we shared in the past, growing triple digits. And I think as we continue to lean into the clinical efficacy side and expand the potential personalized treatment options, there's an opportunity for us to continue to lean in and continue to take fairly meaningful market share.
Yeah, makes sense. And then as a follow-up, you mentioned some investments you've made in the 4Q in your affiliated pharmacies, and that accounted for a majority of the big increase in the purchase of PPE this quarter. How should we think about CapEx and investments needed in your website and app for 2024 and beyond? Is kind of an $8.5 million the right runway rate per quarter on PP&E, $2.5 on website? How should we be thinking about that?
Yeah, great question, Dan. I think it's going to probably vary across quarter to quarter, so it's not necessarily going to be just like a neat investment. I think that there's two areas or two ways that we think around it. One is just expanding capabilities and capacity. So as we start to look to have a broader evolution of personalized offerings on the platform, that is one area of investment. The other big area of investment, that's more likely to show up in late H1, early H2, is really around with a different level and scale profile that we currently have relative to most other players in the market. That affords us the ability to start to leverage the balance sheet to automate processes within the affiliated pharmacies. And so as a result, that effectively makes the overall ecosystem more efficient, pays back pretty quickly, but then also enables us to pass value back to consumers with very limited margin degradation.
Got it. Thank you.
Your next question comes from the line of Jonna Kim from TD Cowen. Please go ahead.
Hi, thank you for taking my question. Just curious, in your guidance, how much of new product launches is baked in there? And in your opinion, what could drive potential upside and downside to guidance? Thank you.
Maybe I can start, and then we'll can hand it over to Andrew as well. I think inherently, like what we are assuming is that the personalization offerings that we have across all of our specialties effectively continues to evolve. And so we've seen a very rapid adoption across that over the years as we've rolled out new products. Now with 30% of the overall subscriber base seeking to adopt a personalized product. The things that could drive further upside on if that adoption happens faster than we anticipate, or there are products, similar to what we saw last year when we rolled out hard mints, that users are drawn to in a faster way than we anticipated. That could result in meaningful upside. The last is we are very much in the early days of weight management. That platform offering will continue to evolve. We're seeing early signs of traction. Historically, we've said that it takes 12 to 18 months to really see a meaningful contribution from categories. But there is the potential for that to be brought forward. And Andrew, not sure if there's anything that you wanted to also add to that.
Yeah, the only thing I'd add is there's really a focus, I think, this year on depth, right? To focus on the core specialties that we outlined. We believe those are exceptionally large when you look at the total TAMs and the penetration rates. They're massive, right? You're talking about 100 million people plus with 1%, 2%, 3% penetration rate. So there's still so many barriers for why people are not getting treated, whether or not that's access or price or stigma or education or a lack of personalized choice. So I think we're continuing to go deeper in the core specialties, and I think you'll see us offer a wider range of segmentation and portfolio across offerings and capabilities and product selection, as well as technology capabilities in order to strengthen the confidence from a consumer's perspective that not only can you get great access to health and wellness at Hims & Hers, but you can actually get clinically the best care for the core specialties that we focus on.
Got it. And just one more question. In terms of the retention rate, did you see any improvement compared to other quarters? And what are you baking in terms of retention rates for the next year? Thank you so much.
Yes, I think we're very excited by the adoption of personalized products as we look into 2024. Our belief is that as a greater share of users shift to those products, retention on the platform will be stickier than historically has. Across many of the more tenured specialties, we have seen some success with some of the personalized offerings. The second is we're lapping the price effects, or we'll start to lap some of the pricing effects from Q2 of last year. And really what we've seen in the early signals is as we put many of the personalized offerings and longer duration subscriptions at more attractive price points, what drove the ability to break even last year was primarily around new users switching and a different composition mix. What we're excited by in 2024 is that we do see the potential for even higher retention for those users that came on, as well as the existing users that are on the platform, just because the products are very uniquely differentiated and they're also at very cost-effective price points. And so the combination of those things gives us confidence, that retention will continue to improve throughout 2024. As a result of that, some of that is reflected into the stronger guide.
Got it. Thank you.
Your next question comes from the line of Jack Wallace from Guggenheim Securities. Please go ahead.
Hey, team. Thanks for taking my questions. Just wanted to ask the contribution question a little differently with regards to the emerging categories. Is there any way you can help give us a baseline for how those categories did in 23? Because if I'm just doing the math here, it looks like there's a pretty significant step up in those categories, and it seems to be a meaningful driver for the guidance. Can you just help us unpack the kind of the relative contributions as we're thinking about the outlook? Thank you.
Yeah, Jack, great question. I'll let Yemi go into a bit of detail, but I think instinctively correct, right? I think we're seeing the emerging categories, first dermatology, weight loss, show exceptional signs of momentum. And I think the early indications of high adoption rate of personalized products really reflect essentially the engagement and stickiness profiles of those customers, right? You have some of our more tenured businesses, the aggregate of the business, around 30% adopting of those personalized products. On the new emerging categories, you have 70+% in Hers dermatology and nearly 100% in weight management. So I think it's reflective of the type of customer, the stickiness of that relationship. I think when you look at the composition of growth, more and more that composition is moving towards a lot of the new emerging categories, which we think are very large TAMs. With that said, I think we've also seen acceleration in the more tenured categories as they've adopted the wider blend of portfolio with the new personalized offerings. So there's definitely a ramp up happening with regard to the emerging categories, and I think it's giving us, in combination with the more tenured success, a lot of confidence to be able to, at that high end of the range, pull forward the 2025 guide of 1.2 and 100 million in EBITDA a year early. So I think really exciting from everything that we're seeing already in the very beginning of the year.
Yeah, and I think just to provide additional color there, Jack, I think we 2023 saw success across both the tenured specialties, as Andrew mentioned, as well as some of the more emerging ones. And so really, as we started to roll out new personalized products within some of the tenured specialties, we saw rapid adoption, many of those products across the portfolio, and so that continues to drive success across the tenured offerings. I think one of the beauties of the overall model is that, given the fact that we have now over 1.5 million subscribers on the platform across many different specialties, we're able to take efficiencies and learnings that we've already historically gotten and that we also continue to get, with that scale, and rapidly deploy them across some of the newer and more emerging offerings. And so as a result, what we are seeing is that oftentimes many of these are able to scale at an even faster pace than some of our more tenured categories historically have, just because we're able to take the learnings across things like marketing, segmentation, messaging, personalization, and so forth, and embed that into how we operate and run the newer categories.
Thank you. That's helpful. And then, one thing maybe I didn't hear you say explicitly, but I'm guessing is part of the outlook, is that there's going to be the potential for some cross-selling inside your base. And as us model jockeys are updating our outlook in response to your strong fourth quarter results in the guide, just wondering if there's maybe any change in the growth algorithm between subscriber growth and your revenue per subscriber going forward. Thank you.
Yeah, at this time, our focus still remains on expanding the subscriber base. I think as Andrew mentioned in his prepared remarks, as well as I think in one of the questions previously, the overall TAMs across the specialties that we serve are massive. And so while we're impressed with having over 1.5 million subscribers on the platform, the reality is there's 100 million users across the country that are suffering from these specialties in some form or fashion. And so the ability to break down barriers and capture those is something that we view we're very much in the early innings of, and so subscriber growth will be the focus. That said, you are starting to see us innovate with the personalized offerings and things like MedMatch, where we're starting to roll out things like multi-condition treatments. We're also starting to think through, what are potential, offerings that a user can simply get treated for multiple things. And as we start to do that, I think that there will be a pretty sizable unlock, but the primary focus today remains on ensuring that across each of the specialties, consumers have an amazing experience and subscriber growth is the primary metric.
Jack, maybe I'll just add one thing there. I think in some ways, as the company's capabilities of the pharmacy continue to improve, and as Yemi said, we're launching, dual action capabilities, triple action capabilities. We're treating, for example, on weight loss, many of the underlying conditions or causes of weight gain. It's the platform, I think, is moving a little bit away from the simplistic concept of maybe cross-sell, and more towards, more holistic care in that single offering. So we might be treating you for men's sexual health, but we're also treating you for cardiovascular risk profile. And that is a personalized offering with dual action capabilities, might not fall as cleanly into a simple cross-category cross-sell, but very much is a much deeper relationship with the customer in a way that is offering multiple categories, multiple conditions, and ultimately we believe it's a much stickier relationship.
Got it. Makes sense. Thank you.
Your next question comes from the line of Glenn Santangelo from Jefferies. Please go ahead.
Yeah, thanks for taking my question. I actually have one for each of you. Andrew, I want to start with you and talk about weight loss a little bit. It sounds like some of the initial exuberance around the potential to eventually sell GLP-1s. That sort of died down, but it sounds like you're getting a lot of traction here, and I'm kind of curious. Could you give us a little bit more in terms of the products that you're offering here? And sounds like you're doing some personalized treatments, and I'm kind of curious as to how you're doing that and how you're pricing for that product, because it sounds like it's been a nice upside surprise for you.
Yeah, thanks, Glenn. We're really excited by the launch. We partnered and brought Dr. Craig Primack into the company a couple of quarters back, and since then have been really refining what we believe is a great clinical offering that goes under the hood of traditional weight management and more of what you'd find at a very high-end obesity specialist, right? Somebody who is used to understanding the underlying causes of your weight gain. This could be things like insulin resistance, metabolic disorders, eating habits, depressive binge dynamics, and treating those things directly, which we have great confidence have meaningful clinical efficacy in helping people not only shed the weight, but also something that's sustainable and something that you can stay on repeatedly for a long period of time. That offering, I think, is something we're excited by, in addition to because it's also a mass market offering, right? We're pricing that in the range of $70 per month, which is a simple cash price that has the holistic care of the platform, the obesity specialist access, constant interaction and adjustment to your treatment, as well as the personalized compounded treatments delivered to your door. So we think it's incredibly valuable. We think the holistic offering, including the mobile application, the content is really compelling and has a lot of efficacy. And it's not to say that we're not still excited by the GLP-1s. We very much expect those to be on the platform and would expect in the coming years for those to contribute very meaningful growth to the business. It's I think very energizing to see the efficacy of those. But we are also pretty excited by the model that we brought to market as a first iteration and plan to continue to expand the portfolio and expand the offering, and believe ultimately this category is going to be a massive contributor to growth. And I think we already are very encouraged by the response thus far that allows us to say that. But with the amount of people struggling, it's very clearly a really big opportunity to help a lot of people.
That's super helpful. Thanks for that detail. Hey, Yemi, I just wanted to ask about the monthly online rev per subscriber. It ticked down a little bit sequentially, but if you look at the average order value, that was up pretty meaningfully year over year and also ticked up sequentially. So I'm wondering if you could just sort of reconcile those two data points maybe and give us a sense for, is anything changing with respect to mix or subscription duration or price or anything that would reconcile those two data points? Thanks.
Yeah, I think it's a great question, Glenn. So I think it's a combination of the factors that you had outlined. I think that we see, really as customers tend to go to longer duration subscriptions, those tend to have higher average order baskets, but also come with an exchange for a longer term commitment, generally a lower monthly rate. And so you sign up for more at once, you get a lower monthly rate. So we are seeing, as a result of some of the pricing changes that we made in Q2, a greater share of users opting for subscriptions that are longer duration in nature. And then there's just from quarter to quarter there is adjustments that happen in the overall product mix. But we would say it's just a lot of the movements that we're seeing are tend to be within the course of normal, and so it's been relatively stable over the last couple quarters.
Thank you.
Your next question comes from the line of Jailendra Singh from Truist Securities. Please go ahead.
Thank you, and thanks for taking my questions, and congrats on a strong quarter and guide. My first question around balance sheet and cash flow strength. Just wondering if you're willing to share your 2024 free cash flow expectations. And related to that, just wanted to get your thoughts on the capital deployment, $220 million cash and short-term investments on your balance sheet. How do you think of deploying cash? You talked about internal investments. Just curious if you have any plans to get back in the mix on M&A, and if there are certain capabilities or areas you plan to focus when it comes to M&A.
Thanks for the question, Jailendra. So I think that we do like the optionality that cash provides on the balance sheet. That said, I think the reality is like we are seeing the operating cash flow that we're generating as well as the free cash flow that we're generating accelerate pretty meaningfully with north of 70 million of operating cash flow, delivered last year. I think in terms of how we think around the priorities, as mentioned, we do see meaningful opportunity to introduce new capabilities, into the affiliated pharmacies, both in the form of additional capacity as well as a broader set of personalized offerings across the ecosystem. And then what we also, do then see is, there's the opportunity for M&A. We're going to hold a high bar for that. I think that the types of profiles of deals that we would look to potentially consider would be similar to what we've done in the past, where it's extending a new capability or expanding a new opportunity, similar to what Apostrophe provided. But like that probably would be the order where we would leverage the balance sheet for capabilities, / capacity of personalized offerings, followed by some of the automation efforts that we talked around to increase the overall efficiency across the pharmacies. And then lastly, I think that we will be opportunistic with M&A, but it's going to be primarily centered around the expansion of new capabilities as opposed to the acquisition of revenue.
That's helpful. And then my follow-up is related to your comments around remaining flexible around incremental pricing adjustments in future. Can you help us with some of the key trends or metrics you will focus on with respect to your decision to do these adjustments in future? Also trying to better understand your assumptions around the competitive environment as part of your 24 guide.
Yeah, I think it's a great question. So I think in our shareholder letter, we did provide, some visibility into, some of the competitive dynamics that we are seeing, and we're quite pleased by many of the actions that we took in 2023 that enabled us to effectively draw new users into the ecosystem, which resulted in greater market share capture. As we look to make pricing decisions, like we consider several factors, but ultimately at the end of the day, like what we are looking for is, does it yield a higher, net present value across the category? And that comes in the form of a higher LTV on each individual user, where retention, more than likely goes up to offset the pricing degradation, or we're able to draw a different user mix or more users into the ecosystem. And so the changes that we saw in the second quarter of last year really were a reflection of a couple quarters of testing to get that right. And so we're continuously experimenting now to identify like what is the right mix to pass through some of that value to consumers. But it generally is expected to be those actions NPV accretive to any given specialty that we have.
Great, thanks a lot.
Your next question comes from the line of George Hill from Deutsche Bank. Please go ahead.
Hey, good evening, guys, and thanks for taking the question. I kind of wanted to piggyback on Jailendra's line of questions there, which is, as we think about the pricing action that you guys are looking to take and are taking, I guess, is there any way to talk about like what should we think of as the benchmarks? Or I guess I'm trying to get more color on how you guys evaluate the pricing action so we can evaluate kind of the market dynamics the same way that you guys do. I don't know if it's comparable prices at retail pharmacies. Is it cash prices? Is it like what's happening with underlying generic drug costs? I guess I would just love any more information that you could give us around like kind of the inputs in the pricing decisions.
Yes, I think it's less around what's happening with the external environment, and I think it's really more around running experimentation across the ecosystem. I think now with the beauty of the model is having 1.5 million subscribers on the platform. That gives us the ability to run several experiments at any given point in time. From that, we're able to determine with the changes, are those resulting in the types of behavioral patterns that we did see. And then we're also able to estimate with our data science teams, is that likely to be long-term accretive and how much. And so I think it's really more of experimentation of opportunities across our platform, and then really leaning into that versus trying to compare to external factors, because the offering that we are increasingly bringing to market is so different. And Andrew, not sure if there's anything you wanted to also add there as well.
No, I think that's right. I think George, there's really not a lot of focus with regard to maybe specific drug pricing or cost to generics or cost for cash pay. because as Yemi said, the holistic offering that patients are getting from access to the provider, unlimited visits, constant iteration and treatment, the delivery of the treatment, content, that whole thing is really incomparable to a specific drug treatment. I think in addition to the experimentation and optimization of kind of a longevity lifetime value analysis, which Yemi was speaking to, I think there's also just a very first principles perspective around understanding that in the core specialties we operate in, there are 100 million plus people suffering. And so when you want to go after a mass market opportunity, right, where we don't aim to bring 500,000 new subs on the platform, we aim to bring 5 or 10 million new subs on the platform. There's just an understanding that as you can leverage your scale and efficiency and bring that back into a customer's pocket, you are unlocking different demographics and segments. And I think as we expand the portfolio of offering, you'll see us be expanding both on the high end for more of the premium experience, as well as more on the mass market experience to give people that flexibility. And
No, that's super helpful. If I could just have a quick follow-up, Yemi. Just do you guys know what percentage of your users pay for the subscription with either an HSA card or an FSA card?
I don't think we have that direct visibility. At this time, I think the vast majority of our users, as we stated previously, do have insurance, and so, but I don't think we have the direct split of how many are using an HSA or FSA card.
Thank you very much. Thanks, guys.
Your next question comes from the line of Corinne Wolfmeyer from Piper Sandler. Please go ahead.
Hey, good afternoon, guys. Thanks for taking the question and congrats on a really good quarter. I want to touch a bit on the gross margin again and kind of what you're embedding into expectations here for 2024. So you have taken some pricing actions, but you're also seeing some scale benefits and other things that are offsetting. So is it fair to assume that gross margin should maybe, still be expanding in 24 and then start contracting and moving down toward that 75% long term that you're talking about? Or how should we be thinking about the trajectory there? Thanks.
Yeah, so I think the path to kind of the mid to or the mid 70s that we've guided to is definitely going to be probably more of a multi-year journey. Like that's not going to happen over the course of like a couple quarters. We do see some pretty amazing opportunities in front of us to also continue to drive efficiency, whether that's in the form of just volume negotiated rates that we have across our supply chain ecosystem, or continued process improvements, like looking to get more and more efficient around those, as well as just the ability to automate from scale. We'll continue to evolve that over the course of several quarters, slash years. But then, as mentioned, like we're actively looking for ways to give back to consumers. But like that does take time to identify what are the most optimal opportunities, and we're going to take our time to do that. And so the path to 70s is not going to happen over the course of 1 or 2 quarters or even a year. It's likely to be a multi-year journey.
Got it. Very helpful. And then is there any color you can provide on the wholesale revenue this quarter? I know it's a small piece of the business, but it did grow pretty notably. So anything to call out there? And then as we look forward and model forward, is Q4 kind of the proper run rate to build off of, or should it be a little bit weaker going forward? Thanks.
Yes, I think the wholesale channel is one that remains more strategic in nature for us. I think it's a relatively small percentage of the business. We do still view it very much as strategic for just bringing eyeballs to the platform. But as we started to have found other mechanisms, namely in the form of brand spend, while still important, the impact of that is not necessarily to the same degree that it historically was. And so I think that the guidance that we can provide is that we're not necessarily actively looking to expand, that channel, proactively. That said, there are periods where, a new merchant or a new supplier might want to, boost one of our offerings. And so some of what we saw in Q4 was a result of that, but that is not an active channel that we're seeking to rapidly expand.
Very helpful. Thank you.
Your next question comes from the line of Ivan Feinseth from Tigress Financial Partners. Please go ahead.
Hi, thanks for taking my questions and congratulations on another great quarter and year and the great outlook.
as you start to work with patients that are using GLPs, as people start to significantly reduce their food and caloric intake, it's going to create nutritional and even protein deficiencies. What do you feel your opportunity is to introduce products to help them manage that? And how would you foresee, let's say, the advisor or the doctor or the provider cross-selling or recommending products like these?
Thanks, Evan. I think it's a great question. I think we holistically believe that we can bring to market for each of these categories the true necessities of what is needed for success. And I think each of the categories likely has a different set of components for that. I think in obesity management, to your point, there's a pretty wide range. There's often pharmaceutical intervention that helps make it easier. There's very clear caloric and nutritional necessity. There's basic movement necessity. There's water intake. There's mental health and sleep. There's protein supplementation. You think about a business like Weight Watchers that's been around for a very long time and has had north of 3 million subscribers for decades, right? I think that business approached it with a couple of the components. I think we have the privilege as a consumer-oriented brand and really building these offerings ourselves holistically to be able to go to market with a wide range. So I could absolutely imagine Hims and Hers having supplementation offerings, having food replacement offerings. As part of the core obesity offering that we launched, there's fairly holistic recipe and nutritional information and guidance. So I think this category is one where you really need all hands on deck, and there's often 5 or 6 components to what makes that puzzle really come together and be successful. And so I think you'll see us as we continue to scale this to evolve the offering and expand the offering to fill a lot of those different needs.
And one more question. And congratulations on the great year-over-year subscriber growth. Do you have any kind of data you could share as far as how you see once a subscriber joins, how they ramp up their purchases, what the percentage year-over-year change is, how much the subscriber, will they go from 1 products to 2 products, and et cetera?
Yeah, it's a great question. We haven't disclosed anything specific on that. I think the best guidance I could probably give you is probably pointing to the personalization adoption. We've gone essentially 0 to north of 30% of subscribers on the platform being treated with a personalized offering, and in the newer categories like dermatology and weight loss, between 70 and 100% personalized. I would say that those personalized solutions, for the most part, often include expanded value. They might include multi-dual action or triple action or supplements that counter some type of side effect or concern of the patient, or multiple dosages or custom dosages. And so I think the rapid adoption of personalized treatments is a really exciting indicator for us of the commitment to the platform and the recommitment of the platform for patients that are, in many situations, upselling and adopting the new offerings that are coming onto the platform at very, very mass market affordable prices.
Thanks, and looking forward to a big 2024 for you.
Thanks, Ivan.
Your next question comes from the line of
Why do they have so many questions, dude?
Partners, please go
Why are there
ahead.
so many questions? It's a dick pill. Why are there so many questions?
Afternoon, evening, guys, and thank you for the question. A lot of mine have been addressed, but I guess I just want to harp a little bit more on the gross margin side. It's great that you have the operating leverage to drive towards the long-term margins as you outlined, Yemi, but why is that level going to mid to high 70s the kind of right number in terms of the way you see pricing and tie back towards customer benefits? Just trying to understand how that fits into the broader scaling effect, and as you settle on that number, whether you're on the pathway there or before you get there, why landing in that number is the right level, and is there potential variability to the upside or the downside beyond that?
Yeah, thanks, Michael. I think it's a great question. So the teams, do spend a lot of time running scenarios on what we call as our North Star. which is effectively, across a variety of different improvements to our model, as well as give backs to consumers. Where do we think that optimal equilibrium lands? And so what we do see is that, as Andrew mentioned, given the fact that we're not looking to, add another 500,000 or 1 million subscribers, we're looking to eventually bring on tens of millions of subscribers onto the platform. Placing our offerings or having a segmented offering that's at different price points for different users is something that is fundamentally important to us. And so as we've started to, run different scenarios, we view that we can offer that holistic suite, both at the premium end, the mid end, and then the mass market end, at a margin profile that lands in the mid 70s. Like, as mentioned previously, that will, take some time. I think you'll see periods where margins similar to like last year may actually expand as we unlock efficiencies in advance of that. But over time, we view the pathway to get to tens of millions of subscribers, having a mass market offering, as well, is a critical element to that.
Cool. That's it for me. Thanks so much.
We have no further questions in our queue at this time. And with that does conclude today's conference call. Thank you for your participation.
All right. Thank goodness. That took a while, dude. Look, it wasn't a bad call. It was just boring. I mean, I like Hims. Hims is cool, but there's so much other exciting stuff going on. Apparently, the Unity call wasn't as good as what people thought. I want to analyze and break down some stuff before we get out of here. Zoom call. Let me know if anyone listened to it, if that was good. Let's take a look at the stock and see how it was. Overall, company did well. They're GAAP profitable. And so that's what got the street very, very excited, obviously, if they're GAAP profitable. But the call itself was just pretty boring. Hims right now up 19% after hours, $12.20. Really, really incredible stuff. Palantir down about 0.59% after hours. That's kind of basic price action. SoFi 8.56 up about 0.23%. Robinhood down about 0.13%, $15.57 after hours right now. CleanSpark up about another 1%. In terms of earnings today, Unity's down 18%. Hims is up 19%. CarGurus is down 10%. Workday down 8%. And then Zoom is up 10%. So here's the numbers I found on Unity that are not good. And I said maybe it's a dip buy. I think it's a wait before you even think of doing a dip buy. Dude, this guidance was bad. This guidance was bad. Full year revenue 2024, $1.76 billion. The street thought they would bring in $2.23 billion. They're missing on about $500 million of revenue disappeared. And it's gone somewhere. Q1 guidance street thought they would do 536. They're doing 515. That's more than $100 million less than what the street expected. Revenue they beat on Q4. EPS they did badly. The street thought they would make 22 cents. They lost 66 cents. So this being down 18% makes a lot of sense to me. The broader argument to me is that, look, if it's down 18%, is that an opportunity? And if the guidance is that bad, I mean, I don't know, dude. I don't know if the guidance is that bad. I don't know if it's an easy dip buy. I mean, I think I have to listen to the call before I even think of buying a share. I have to understand why was the guy, dude, where did those $600 million go for next year? Like, it was the street that off that they expected it to be bad, or was Unity are they just not going to grow as much as people thought they were going to grow? Kathy Wood owns a lot of this stock. Let me check ARK Innovations ETF on this one. She owns a lot of Zoom. Zoom's up 10%. That's good for her. But Unity is a company they owned. Like, if I'm not wrong, they own a hefty position in Unity. Yeah, look, they own $271 million of Unity, dude. $250 million inside this company. So that one is not necessarily doing the best. And we'll talk about it on Finance Junkies. Vitaly's pretty bullish on this. They do have a partnership with Apple. Their stock-based comp also, I heard, is very bad. Hold on, let me tell you guys right now. Their stock-based comp, Unity, last year, these guys spent key charts. Unity spent on stock-based comp. Last quarter, they spent $147 million. Yearly, 2022, they spent $550 million. Okay, now let's do as a percentage of revenue. Oh, we don't have a percentage of revenue. So let me just see let me see the revenue. So 2022 revenue, Unity put up Unity put up, wow, 1.3 billion, 500 million was stock-based comp. So that's basically what, 37%? 500 divided by 1.3. Yeah, 38%. They put up 38% of stock-based comp as a percentage of revenue. That is a lot. I mean, Palantir's at 22%. I'll get the updated 2023 numbers, but stock-based comp is high, which means dilution is high. Guidance is horrible. I mean, there's no reason the shit should be down more than 18%, quite frankly. I mean, that's pretty tough. Pretty bad. Market cap of Unity is 12.5 billion, which kind of seems like it's, not that expensive. But when you look at these numbers, and they're not profitable, missed on guidance by 500 million, and stock-based comp is high. I don't really know what the dip story is there to buy, but we'll talk more about it today. They are a monopoly with Unreal Engine. Maybe that's the part that's exciting. Carr says, are you still bullish on Palantir? Yes, I'm a little bullish on Palantir, just a little. In fact, I think we might have AIPCon soon, guys. Just the word going around the block in the Palantir community. I think AIPCon 3 is coming up soon. So we are going to get some juicy updates in the world of Palantir. That basically means, yes, AIPCon 3 is happening. So it'll be fun. We'll see a lot of new navigations of what Palantir is doing with AIP and how they're doing it in a meaningful way. I feel like it's a long-term hold for AR VR. I agree, Vix. I just, in a market like this with capital that's, so many opportunities, like I'd buy more Robinhood than I'd buy Unity, dude, if I'm looking for short-term gains. And so, look, Robinhood, I expect to get a pullback. For those that missed on Robinhood, I think you'll get your chance again at around 1480. I think that will happen. Would I count on it not happening? Not really, especially if Bitcoin keeps running. I think the cat's out of the bag on Bitcoin with these institutional investors. When this thing gets to, what was all-time high? 69? When this thing gets to 60, dude, I just can't imagine Robinhood's not closer to $20 at that point. We saw what CleanSpark's doing, and I know that's more of a one-to-one correlation, but remember, Robinhood's going to make a shit ton of money. Like, it's not just their stock's going to go up because Bitcoin's going to go up. Their crypto revenues will go higher. And if those go higher, like the street's going to buy it before it fully goes higher. So we'll see. Please explain how Hood gets positive operating margin. They are negative 40%. The big thing for me on Robinhood is that they are still GAAP income positive, right? So somehow they squeezed out $30 million of profit. The way I think they ultimately get to that is more deposits, right? So when they have more deposits on their platform, which last quarter they had 3.8 billion, what do they do with those deposits? They use it to generate interest income. And that interest income is very high margin. And transaction revenues are going to go higher as crypto starts to go higher. And as a result of that, they have fixed costs. This is what management has been saying, that technology is kind of their key moat in terms of differentiating from Fidelity and Schwab and all these guys. So I think they can get to positive operating margins. I think that can happen this year. They need a big bull run in order to make that happen. And look, rates haven't even come down yet. When rates come down, equities go up. That's going to be a bullish thing for Robinhood. AI is bullish for Robinhood, not because of robo taxis or anything like that, or robo advisors on the platform, but in general, if AI is going to make the entire market more productive and earnings are going to start to go up across the board for companies, and we get rate cuts, that's a catalyst for a big bull run in 2024, which Robinhood's going to benefit off of. On top of that, are you still holding Hood calls? Yeah, a lot of them. On top of that, if you look at the technicals, above 17, there's no volume, dude. This thing can run. Above 1350 was the first point of resistance. Now we're at 15.5. I think we have to stay here for a while before we think we're out of the doghouse. I don't think 1350 is that easy. We would have to fall a good 15, 20% to get back down to that 13-ish range, 1350. I don't know if that's happening that easily. And I think 1480 is possible, but 1350 is going to be tough. And then after 17, the pathway to 33 is actually very clear. And if we get to 17, it's because FOMO is starting on Bitcoin. And if FOMO is starting on Bitcoin, then 33 is not insane for Robinhood. Now, do I count on that happening? Probably not. But do I think 20 by the end of the year is possible if Bitcoin does what it does? Yes, I think that could happen. So we'll see. Hey, Amit, you would be up ass on the Hood calls if you didn't sell some at 1350. Kind of. So I sold 100 of them and I made, let's do the math right now, right? So I bought 450 at $78. So I spent 35,000. Currently, those would be at a 150. Those would be worth 67,500 divided by 35,100. So 32,500 would be the amount that I would be up. Currently, I think I'm up 28,000. How much am I up on these? Yeah, basically 28,000. So there's a 4,000 difference, and I made 4,000 on the options because I sold 100 at 129 minus 100 times 78. I made 5,100. So when Robinhood gets much higher, then I would have seen I would be down. I would have made more if I kept them. But as of now, it's still I basically break even because I actually got to realize the 5,000. Now, granted, my goal was to take some. Here's the thing about why I started selling a lot more Hood. I wanted to have a defined exit strategy as I approach these options. The one thing I think I miscalculated on is these things are 2026, and if they were 2025, I think that would make more sense. But 2026, I do have a lot of time, So for me, I think I got a little conservative taking profits, but nonetheless, I think we had to sell some and definitely realize the gains. And we did. And also I needed some cash to do some stuff that I'm going to tell you guys in the next couple of weeks. You guys will get some announcements from me. I needed some cash. And so it was a good time to raise some cash. But we still have 350 left, and we're going to let those play out. If Robinhood gets to 20 by 2026, we're going to make 150 grand, which would be really fun for the channel that day. I can't wait to call my dad and be like, Dad, we made 150 grand. We're buying you a new car. Honestly, my dad wants to get a new fucking car, dude. His car is trash. He's had this car since 2008, and he doesn't want to spend the money. And quite frankly, he doesn't have that much disposable income to buy a car. I would love to just buy him a car in 2 years. That'd be awesome. That'd be really cool. So let's see. Maybe Robinhood gets our old man a car. Is the chat invited to your wedding? Dude, I think at this point, the chat has to come to the wedding. I think the chat has to come to the wedding at this point. Lusty Digger says $20 Robinhood end of year is very conservative. Here's the thing. It is very conservative. And I'm saying this because I don't want to sound overly crazy bullish because I hate when people sound like that. But quite frankly, you're right. $20 end of year is pretty conservative because if Bitcoin gets anywhere near 70 or 80K, which post halving, I think most people think is going to happen. Dude, Robinhood's not going to be stuck at $20. It's just flying. It's flying because the crypto revenues are going to be insane and the fucking FOMO is going to be ridiculous. And institutions have been accumulating for 2 years. It's a 75% institutional float and the stock's at $8 for 2 years. I mean, yeah, this thing's flying from 20, but I just don't know if that's going to happen for sure, So I don't want to necessarily say that, but I agree, dude. I think that's the case. Where's BTC right now? 54.6. 54.6 right now. Golden Eagle says, I have a 2007. Will you buy me a car too? I wish I could buy you guys cars. Dude, I wish I can get rich enough one day. Just buy subscribers whatever they want. That'd be so much fun. But look, Robinhood's got a lot of work to do, dude. They got a lot of work. The thing is, I actually think $20 by 2026 is possible because I think the team is executing. And I was watching some Vlad interviews over the weekend. They've transformed the company from a trading app to a real financial product. By the way, March 26th, we have the credit card that's launching. I'm really excited to see what the hell they're going to do there. I think they're going to have some crazy perks for gold members, and that's going to be super exciting. And then we just got this bit of news. They're presenting on March 4th at the JPM conference. So I'll stream that here. Their CFO is going to be there, and JPM actually is very bullish. They have the highest price target. I think they have $25 price target on Robinhood. They're the most bullish on the street. So I think the situation is just setting up for a bull run and for Robinhood to benefit. And the valuation still seems like really undervalued to me. Robert Knight says, live stream the wedding and I want Pouncer to be mentioned in your vows. Dude, I think my wife would kill me. I think she would actually fucking kill me. Now, if she actually loves me, she would. When I say you are the ontology of my operating system, she should laugh when I say that. When I say you are the ontology of my operating system, dude, that tweet is going to get some fucking views. That tweet is going to get some views. That video is gonna. That's gonna be good. That's gonna be good. Pouncer should retweet that shit, dude. They should retweet it. But if she's cool, she would understand. SoFi 859. Soundhound is down 6% after hours. Clean Spark up $20.40. I think tomorrow, guys, we're gonna see a little red because today was very green, and you don't get this much green without a little bit of a pullback. So I expect. If you wanted a dip, tomorrow might be a little bit more dippy. I'm just speculating here. Or FOMO might take in and people might be like, you know what? I didn't get CleanSpark at 15. I'll fucking buy it at 20. It's only $5 different. That doesn't matter, right? Like that might end up happening tomorrow. So we'll see. Puts on Bumble. Okay, so Bumble's such an interesting company to me. I never met a girl off Bumble. I've had more success off Tinder in my days when I was a bachelor. But 1280 on Bumble. The CEO Whitney Wolf Herd, she left a couple months ago. So she's the only person I could imagine that could really run Bumble effectively. This thing IPO'd at $70, dude. This thing's down badly. I wouldn't buy puts on it because it's down so badly. Like it's just been so bad. But I mean, I don't know. I don't know if Bumble's. I don't know if it's worth even taking the chance to look at Bumble right now. Let me pull this up right here. But in general, I mean, like dating, is that really, like, that's not an AI play, that no one cares about dating right now. So I don't know what the bull case is for Bumble, right? And they're not going to use AI in any meaningful. Look at this thing. It's down from $80, dude. Down from $70 to 12. And the revenue growth is not the best. Subscribers not the best. Like, I don't know. I don't think Bumble's that exciting. Does buying Hood 2026 options $20 strike still make sense after the run up? Look, the question is, do you think Robinhood will be $20 by 2026? If you think the answer is yes, then I think it does make sense. Robinhood's still not at $20. It's at 16. So you have some margin of safety. The problem is, look, here's the problem to this question. When someone asks, should I buy XYZ after it ran up? You have to be prepared to DCA. Yes, it ran up. So the odds are it's going to come back down and you could get a better price. The problem is it's very hard to time that. And if it's very hard to time that, then you might miss the whole thing. But if you get in right now and it pulls back, then you might be like, oh my God, like, why did I chase this thing? Well, that's why you got to be ready to DCA. So yes, I think it still makes sense because 2026, $20 strike, I think is relatively cheap by the time it gets there. But I do think that you have to be ready to DCA into it because it could fall back. Now, Coinbase had a hell of a day. I did not expect Coinbase to have this type of a day, dude. Coinbase at 195. I mean, I didn't get to look at it the whole day. I was just so busy. But Bitcoin getting to 54K, yeah, that'll do it. I remember the argument, which I even bought into for a little bit, was that ETFs would hurt Coinbase. No, that is not an argument. ETFs are great for Coinbase, dude. ETFs are great. Smokey says, I've been buying the $20 strike for 2026 on SoFi. Dude, I think I'm going to be with you. I think we're going to buy some of that shit in the Roth. I think SoFi 2026, I'm looking at it right now. It is currently, how much is this shit? It's $1.19. And it's not up that much over the past, let me see. Over the past 3 months, it's up 10% because it just got listed December 29th. And that's another thing, guys, I've noticed. When option chains just get listed or new strikes get listed and they're leaps, there's mispricing in the options. So if you look at certain option chains that get that get added because the stock goes higher, so the market makers have to add new chains, there's low open interest. They're kind of like odd numbers, right? They're not like ending in a 5 or a 0. And as a result of that, and if they're new, which is this $20 strike seems to be, I mean, it was added in December, but there's other things I've seen that are new. They get mispriced, especially if they're far into the future because the market doesn't know how to price them. That creates some really good opportunities because, again, leaps already are usually mispriced because, the market doesn't know what the hell's going to happen in 2 years. And then on top of that, if you get a weird strike that eventually the momentum is going to pick up, this is what happened with TFC in 2026, because you have so much time for that open interest and the volume to pour into, you might actually get some attractive options before. So SoFi, I don't know if it's necessarily mispriced, but it's only up 10% in the past 3 months. It seems like that's the cheapest one. The question is, will SoFi actually get Chad in the chat? The question is, will SoFi actually get to $20? Chad, we are talking about options, okay? I know you are in your big world doing, we do financial engineering here. Chad, for those that don't know, is a actual engineer at Palantir, okay? So he's busy trying to make LLMs like make sense all day. But Chad, we don't care about that stuff, all right? We care about money, Chad. We don't care about all the things you care about. We just want you to keep doing your job so that we make money. But if you start talking to us about retrieval, augmented generation, or all this other stuff, or Palantir goes ontology, augmented generation, you think you sound cool calling it OAG instead of RAG? You're not cool, bro. I'm just telling you right now, you're not cool. You think you sound cool. I retweet all your shit because it is pretty cool. I'm not going to lie. It sounds like ontology augmented generation sounds way cooler than retreat. So I retweet your shit and I like your shit because it sounds cool. But I'm just letting you know, you're not cool. You're not that cool. His Twitter's in the chat, by the way. Everyone, make sure you follow Chad. If you're on Palantir and if you care about Palantir and you're on Twitter, you got to follow Chad. He is basically becoming the Palantir de facto. See what I did there? Employee on Twitter. That he's like this with the community. For those that don't see me, I'm putting my my fingers together. He's one with the community. So definitely make sure you follow Chad and let him know that he's not cool. He thinks he's cool. Ontology augmented generation. I mean, look, it sounds cool, but talking about the financial equity markets are cooler. No, I'm just kidding. Ontology augmented generation is actually cooler. But yeah, make sure you guys follow Chad. Okay, so what else? What else do we have going on? SMH, that's up a little bit. TFC. Oh, so Bill Gross tweeted about regionals. And let me know if you guys know what he's trying to say, because I don't understand this shit. Okay, so Bill Gross tweeted this. Apparently, regionals were down today because of what Jamie Dimon said. So Jamie Dimon said something about regionals, probably fear-mongering, whatever he said about regionals. And then Bill Gross was like, I kind of don't understand this tweet. I actually don't understand. Hold on, let me pull it up. Where is it right now? Bill Gross, Twitter. He tweeted something about regionals. Is this it? Dude, where's his Twitter? Why am I getting I'm getting the wrong Twitter. Basically, he tweeted that he's waiting on regionals. He's waiting before he makes a decision on regionals. And he was super bullish in the summer because he saw the rate cut coming, but obviously the rate cut's not coming soon. And so I think that's why he's a little scared right now around what's going on with regionals. Oh, I think I can pull it up. Here we go. So here it is. So this is what he said. Regional banks under pressure due to Jamie Dimon comments. He knows the business, so I'm not catching a falling knife for now. Value to come. Okay, so I think what that means is he's not buying regionals because he thinks it's a falling knife, because Jamie Dimon said it's a falling knife. And value to come, I think that means that eventually they'll be good, but not right now. I don't think he's selling, though. It would be interesting to know if he's selling regionals. But he was super bullish in the summer. I don't think regionals are in that big of a crisis, dude. I think everyone's overblowing the regional crisis because of New York Community Bank. And I mean, maybe some regionals are not the best. KRE has been stuck at 48 or 47 today. It's down. I think regionals will be fine. I think once we get I think they can survive until July when we get a rate cut, and then once we get a cut, we're gonna be okay. But yeah, Bill Gross is seeming a little bearish on regionals. Do you think Sound can do like Hollow? Is Hollow a crypto? Is that a stock? Hollow? It's a stock. Yo, Hollow's up 81%. What is going on, dude? What are these random companies that are like just exploding? This thing's up 80% today. What the heck is this? Talk about a small cap, guys. This shit is $70 million. It's up 500% in the past month. How do you guys know about this stuff, dude? And why don't you know about it before it goes up 500%? No, I'm just kidding. No one knows about this shit. Dude, that's crazy. Okay, so please do not chase Hollow. I know everyone's like, oh my God, this thing's up 50%. Do not chase Hollow. Do not chase Sound. It's not worth the mental stamina to chase this shit. It's just not. And I know it sucks seeing something go up 500% and you missed it. But like, I missed it too. So don't feel that bad. Like, we all missed it. It is what it is. I have no idea what Hollow is. Micro Cloud Hologram? What the fuck is this? Engages in research, development, and application of holographic technologies. Dude, really? Holographs are making a comeback? Holographs? Like what? Is Tupac concerts going on right now or something? This thing looks weird, dude. I don't know. I'll research it tonight. I'll try to, on the market open tomorrow, I'll try to talk more about it, but yeah, I wouldn't chase it. I don't know if SoundHound could pull something like this. It's already up 100%, 150%. Maybe it goes up more. It depends on that earnings call this week and see how the CEO talks about the company. Ethereum now 3,200, folks. Ethereum 3,200. It just hit it. It just fell 30. Now it's at 3177, but it just hit 3,200. Wow. Oh boy. Oh boy. Oh boy. Oh boy. All right. Hollow was over 100 last month. Yeah, I guess so. Dude, this is what's making me feel weird about the markets. This is why I raised money last week, because I was a little scared about what's going on with shit like Hollow and Lunar. But I don't know, dude. Maybe we get a pullback, but I don't know if we get a collapse or a recession. I listened to a lot of stuff this weekend. I tried to form my opinions. We don't need to have a recession just because things are up. We could have a pullback, sure. I don't know if we need to have a recession. And I don't know what the catalyst is for the recession. People will take profits. We'll have a little bit of a pullback here and there. But if Bitcoin keeps running and crypto keeps running, and again, I'm not just saying this being like, oh, if it happens. Like, we look at the data every day. The ETFs are exploding. BlackRock got $1 billion of inflows today. Like, that's $1 billion of fresh new capital today. Like, at this point, it's just math, supply and demand. It's not hopium of, oh, maybe crypto will go up. Like this is math we're looking at. We're looking at limited supply, a lot more demand, and then retail FOMO that hasn't even started yet. So, Peace, thank you for the super chat. 50 gifted subs plus $500 gift. What are we buying? Yeah, we have to put $500 into the public fund. I think we'll do that right now live. We'll put Derek's $500 into the public fund live. So here's the public fund, which is a YOLO Palantir public fund. So we are up 2% on this fund. All time, we are down $10. Okay, so we're going to deposit some money into this thing. Deposit. Okay, I'm going to do the deposit before I show you guys because it shows my bank account. Deposit, $500. Deposit. Okay, boom. We have deposited Derek's super chat, which, by the way, YouTube's going to take like fucking $250 out of that $5. I will let you know tomorrow how much YouTube takes. I'm pretty sure they take 50%. But today we know for sure Derek put in $500. I will show you tomorrow how much YouTube takes. It's kind of insane, dude. Like, if someone gives $500, YouTube should not get 50% of that. Like, ad revenue, whatever. But this is someone like being nice. Like, this is just like your community. Like, this is like, that's kind of, it's intense, dude, taking that much money off. So, because then it makes no sense for someone to send a super chat if YouTube's going to take fucking 50% of it. Like, that's kind of ridiculous. But yeah, so we put 500 in the account, and I think tomorrow someone has to pay Sundar. Yeah, someone has to pay him for being asleep on the earnings call and trying to make Gemini teach you about social justice, dude. It's wild. They don't take 50%. All right, we'll see tomorrow. We'll see. Or actually, we'll see the day after because they do the revenue a day after. So we'll see on Wednesday how much these guys take. And I'll let you guys know. I feel like it's close to 50%, dude. I'm literally holding up Google stock, my YouTube channel. Yes. But yeah, I think tomorrow we'll buy some Palantir with $500. We'll buy some Palantir. Now, granted, I say all of this about Google. I think Google might be a buy here, dude. And now it's at 139. I'm not buying this shit because I can't sleep at night holding Google. But I think not. They're not a buy because of search. They're not a buy because of they'll figure out the wokeness. They're a buy because they have so much fucking cash. They're going to do something. At some point, they're going to lay off employees. They're going to get rid of Sundar, or they're going to do a buyback like aggressively, or the dividend, the meta play. They're going to do something. They have too much cash and they're too powerful to go down this way. Or maybe they're not. Maybe they're not. We'll see. All right. That's it for me. Thank you, everybody. Been a fun day. We'll see what happens in the future. I have a lot of announcements coming up in March. Number one, I talked about this in the morning. My software that I'm building for Palantir investors. It's a SaaS software as a service business that will be out tentatively March 8th. I will be doing an entire presentation on the Market Open Live at 10 a.m. Presenting you guys that software. It will cost $42.69 a year, which comes out to $350 a month. I think the value of it will far exceed the $350 you pay a month. So for those that are interested in Palantir, this is my first attempt to build kind of like a paid service, which is, in my opinion, way better than a Discord, way better than a Patreon. I think it's actually something you guys will use, even if you even use it once a month. I think the power users will probably use it once every week, and really power users definitely will use it once a day. If you care about Palantir, it's one of those things that for $40 a year, I think it's worth just having. For $40, I think it's, I don't think it's, I think it would be a no-brainer if you like the concept of it, and then $40 is $40. So that we'll be announcing that on March 8th. And then I have two big announcements I'm announcing that I teased last week. One of them is not fully confirmed, but it looks like it could happen, and that's going to be a crazy announcement. You guys are going to like that announcement. And then the other one is officially confirmed, and it's done deal. It happened 2 weeks ago, and that shit, you guys are going to lose your mind. I'm not, you guys are actually going to lose your mind. It's going to be crazy. It's going to be insane. I will do an entire live 1 hour explanation of the announcement. It's going to be so crazy that it's just going to be wild, dude. It's going to be wild. It's nothing to offer in terms of money, or it's not a paid service, nothing like that. It's a really cool thing that has happened. And I think you guys will enjoy it. And so it'll be fun. So we got a lot of announcements in March. We have the thing that's up in the air that might happen, which I believe is probably going to happen, but I'll let you guys know. Then we have the SaaS product we're launching, and then we have another big announcement that's already happened, and it's going to be really cool when it happens. It's just going to be really cool. I can't say anything yet because literally, legally, I cannot say anything yet. But when it comes out, it'll be really fun. Someone said, I'll give you the $40 even if I never use it. Okay, so here's my thing. I talked to myself about that, right? Because I was like, all right, what if people give the $40 just to support, but they never use it? My psychology here is simple. I think there's people that want to support the channel, but haven't found an easy outlet to support the channel that get a lot of value from the channel, and $40 to them is nothing for the support. So I'm kind of okay with them giving $40 just to support the channel, even if they don't use the product. But number two, I genuinely, and I'm saying this deep down, if you care about Palantir and you have this product, you will find a use case for it at some point throughout the year. So it's a $40 subscription for the year. I think at some point in the year, you're going to use this thing, and it's really fun to use. So to me, I think you're going to use it more often than not. So at least if people use it somewhat, it will make me feel better that they're not just paying $40 to support. But if you pay $40 to support, then also it is what it is. I already told you guys, YouTube doesn't pay shit. I mean, the ad revenue is not enough to survive on. So at some point, a creator has to figure out how can they monetize their audience in a way that's, in my opinion, ethical. And doing some stupid paid course or some stupid community in a Discord, like it's just, we've seen it over and over again. You got to be innovative. You got to be creative. You got to find a way to offer something to people that gets them excited. And even if they're just paying for the hell of it, at least they're getting something. And I think that's what we came up with. And I think the TAM for Palantir is growing. I think there's 10 to 15 million globally people that care about Palantir. 1 to 2 million of them are on social media. And I think I realistically have access to about 10 to 15,000 of them with my distribution. When Palantir keeps going up and up and up, which I think it's going to happen, that will grow and grow and grow, which I think the product will grow and grow and grow. And I think the one day the product can do well. So it'll be cool. It'll be cool. It'll be cool. It'll be super cool. Jess says, like, change the world in a PayPal kind of huge way. I hope not. No, this is not a shock the world type of announcement. This is, see, the good thing about my software is it's $40 a year, and I'm hoping at best we sell 1,000 subscriptions, and that would be pretty awesome to me. And that's not 40 grand in profit, guys. There's maybe like a 60% margin on this because it costs money to run the thing that I'm building. So it would be a nice little side income. But PayPal is a $60 billion business that says to shock the world, and they can't fucking shock the world to even get their stock price at $60, dude. They can't even get the stock to be $60. Jess is right about that, dude. Jess is one of my Twitter friends. She's been telling me PayPal's dead, and she likes my Robinhood thesis. She hates my PayPal thesis. And we made some money on Robinhood, but we are making nothing on PayPal, and we meaning me. So PayPal at $59.33. It's not even $60 at this point. It's a $63 billion company. Hopefully they can shock the world later. But yeah, my announcement shouldn't be too shocking to the world. Lusty Picker says, hey, Amit, have you reacted to the CNBC interview with Jessica Inskip? Is this a joke? Who's Inskip? Jessica Inskip. Is that enormous tits or something? Jessica Inskip. I'm trying to say that in my head. I'm like, am I saying something bad here? Who's Jessica Inskip? No. Inskip? Oh, she's a real person. Oh, on the options thing. Okay. We'll react to that in the morning. She's saying Nvidia's bullish on options. Yeah, Nvidia options volume is ridiculous, dude. 691,000 contracts. Ridiculous. Absolutely ridiculous. Yeah, we'll talk about that in the morning open. We'll do that in the morning open. It's not a joke. Okay. You know I'm traumatized from this shit. I was like, is it enormous stits or something? Like I'm not gonna mess up this time. There was another really embarrassing one I did, dude. I forgot the really embarrassing one I did. I forgot which one, but it was bad. It was bad. Okay, so those are the announcements, and it'll be fun. Someone says, what will it do? Let's just say if you care about Palantir, I think you would pay $40 a year to use this because you will never have to use anything again to know more about Palantir. I mean, you're gonna have updates and access to, like, it's gonna be something that's fully integrated in a way that I think is unique to the community, hasn't been done before. The marketing is going to be really fun for this thing. And I just think that if you own Palantir, it's a no-brainer to have this in your portfolio, not in your portfolio, as a tool to use as you hold the stock. So yeah, that's it. It'll announce in March 8th. It'll be fun. It'll be a cool presentation. The other reason it'll be a cool presentation is because I'll be presenting it to you guys on the stream. So it's kind of like you guys are investors and you're kind of like, even though you're not investing in it, but like it'll be a pitch. And then at the end of the day, you have to decide if you want to quote unquote invest $40 of your money into a product. So it'll be fun. I enjoy presentations. I forgot to tell you guys. I'll tell you guys now. I didn't get to tell the morning open because we had so much shit going on. Your boy closed the deal this weekend. Your boy closed a deal. I closed a $6,000 consulting package for debate consulting this weekend. And I spent all 6,000 this morning. Spent all 6,000 this morning, not on a stock, on something else. You guys will find out about this stuff later. This is part of these announcements. But yeah, look at this shit. I tweeted this at fucking 2:34 p.m. I said, about to close a 6K consulting package on a Saturday. I tweeted this knowing that I'm going to fucking close this deal. Okay. So there's a little bit of risk here. I was like, I'm going to tweet it. So people are going to want to know if I close. I can't lie. So I'm pretty bullish I'm going to close it. And then at 2:40 something, I closed the deal. Where's the quote tweet? And right here. But yeah, like 10 minutes later. Yeah, 2:47. So like 13 minutes later, I was like, boom, closed. This is done. So we got 6K in the bank. We got 6K in the bank over the weekend. And the fun part, the reason I'm bringing this up is because when I pitch you guys the software, it's all about sales, right? It's all about presenting. Dude, this call was smooth butter. This is what one of the guys said after. It was 3 people I was pitching. They were paying 2K each. And they're 3 parents. They had 3 kids, all of them in the same school. They're paying 2K each for the service. And one of the parents said in the WhatsApp group, I like his energy. Thanks for setting this up. It's all energy, baby. It's all energy. All this shit is energy. Now, you got to know your shit. I know how to sell. I mean, I've been doing this since I was 18 years old. I've been selling debate consulting for a very long time. But I haven't taken on any clients in like a year. So this opportunity came to me from a friend of a friend, and they really, really wanted me to coach. And their kid is really good. Like, their kid's actually a very good debater. So they have some raw talent. So I got interested. I was like, all right, let's see what happens. And their parents are good. Like, you don't want to deal with annoying parents. Like, these are parents, dude, they paid me this morning. Like, we had the meeting on Saturday. Like, these are parents that are well off enough to like pay the money, and they just want to make sure they get a good service. And so it's a really good deal. And so we got the deal. We got the deal done. Robert says, can I buy stock in the app? No, we're not raising money on this one. We did that one already. And this one, we're going to do a lean and machine. We're going to run this like a profitable business should be run. And we'll see how it turns out. Look, I don't even know if it's gonna be successful, dude. I think 1,000 subscriptions is possible. On the high end, maybe 2,000 subscriptions. I think long term we can sell 5,000 to 10,000 subscriptions, but really like in the next 5-10 years type of thing. But it's a side business. At best, let's say we sell 5,000 subscriptions at $40 a year. That's doing what, 200 grand a year in revenue, maybe 150 in profits, which is not a bad business, but it's not like a million. It's not something I think someone wants. There's not a return you're looking at, right? It's not a massive venture scale business, but it's a nice side business for me to finally have some fucking income because I've gone 2 years without income, and it would be nice to have some income. So, but yeah, anyway, that deal we closed, that was a good deal. I did spend the 6K this morning, so it's not in the bank anymore. But yeah, so I think when I present to you guys, it'll be fun. I live for the presentation. I live for the hype of the presentation. Like, I love that. Like, getting onto the call, dude, there's not even a part of me that gets nervous about this shit. Like, I got on the call and I just handled the call. It's like what you're supposed to do when you're selling. Like, you know how to answer objections. You know how to be funny. You know, there were moments that all 3 parents started laughing, and in my head, I'm like, dude, I do this every day in front of 1,400 people. Every one of those 1,400 people in the morning is fucking dying of laughter when they're listening to me on the market open. So of course I'm making these 3 people laugh on a Saturday afternoon. Like, of course, like this is just butter, dude. This is butter. So it was fun, dude. I love presenting. And I like the challenge of presenting. And so it'll be a fun presentation on the pitch. ET with the crickets. Dude, people laugh in the morning. What joke did I make this morning? Oh, no, I talked about death this morning. I talked about mortality in the morning. So if you guys want to go back to them, I was talking to my parents over the weekend, and they said they're starting their will. And I was like, will? What the fuck you doing the will for? And they're like, well, we're going to die one day. I was like, oh yeah, that shit is going to happen. I forgot. Like, everyone's going to die. And so I started thinking over the weekend, like, yo, like, we're all going to die one day. And I haven't thought about death in so long because I've been so busy working. And I feel like sometimes you got to take a second to realize, like, yeah, you're going to die one day. And I used to overanalyze death a lot when I was little, but I don't do that anymore because I don't have time. Like, that whole idea about like being a philosopher takes privilege. It's kind of true. Like, if you're a philosopher, it's because you have the time to philosophize. And like, I don't have the time to philosophize anymore. I'm trying to make some money. So yeah, I think today there weren't too many jokes. It was more deeper stuff, but tomorrow we'll make sure we have the jokes. Okay. ET says they really were dying of laughter. Dude, ET, you actually have to go into comedy. ET is the funniest person I've ever met in my life, dude. On the chat, like, dude, do you remember the Cash App joke, ET? I'm not going to say it again. The Cash App joke from that podcast on SoFi Weekly, when you typed in the chat, that's when I realized this guy will say anything to be funny. I'm not repeating the joke because it was such a horrendous dark humor joke. But I don't even want to say it's funny because I feel bad saying that. But as soon as I saw it, I was like, yo, this guy doesn't mess around with the jokes. So anyway, that's it for me. Thank you everybody for being here. High Fade says, why won't SoFi move? SoFi did move today. They're up 5%. They moved. I think they're forming a base above $8. They're past the sevens, 861 after hours. I think SoFi is going to be fine. $10 is probably close to fair value. This thing's going to break out. SoFi will break out. It'll take time. Now Kathy's back in this shit. SoFi will break. It's going to take some time, but they'll break. They'll figure it out. Robinhood down a little bit after hours, 1556. And then where's Palantir? 2349, down about 0.3% after hours. Sachin, what's up? Yo, you are online. Yes, Sachin, we need to do another pod. You and me, just you and me, talking about Palantir after the run. I'm going to message you on Twitter. We should do the pod this week if you have time. Just you and me discussing Palantir now after the run and how you think about the valuation. It'll be a good one. I'm sure a lot of people are curious now about your thoughts. Sure. Okay, boom. We got Sachin. I'll message you, Sachin. We'll set this up and we'll do this pod. All right, guys, that's it for me. What time is it? 6:42. I'll be back on Finance Junkies at 9. We got a lot to talk about. Unity, Google, everything that happened today in the markets, crypto. And we'll keep going from there. Jess, you're in Soundhound? Wow. I did not expect you to be Soundhound, Jess. I thought you were very conservative with investments. I didn't think you would chase that unless you got in before everybody and you weren't chasing. But wow, you got into Sound. Interesting. All right. I'm happy you're up. It ran 50% today. That's great. All right, guys. Awesome. I'll see you guys in the market open tomorrow. Thank you, everybody, for being here. And yeah, let's keep going. 8:45 a.m. tomorrow. Bye, everybody. Have a good one. Good night.